So, welcome everybody to the first International Blockchain Day at the OeNB in Austria. Big applause for everybody to be here. Yay! Before we start, because we want to learn something today, question to the audience. First of all, who knows what a CBDC is, really knows? Perfect. Who knows what a stablecoin is? Okay. And who knows what the asset reference token is? Okay, so we are perfectly prepared for today. First of all, I really would like to thank you to OeNB that we can host this event here, and especially Reinhard Becks, and big applause for him for making this possible here. And for the opening words, I would like to ask Franz, Director of Treasury, on the stage. Thank you so much that we are able to be here.
Yeah, good morning, everybody here in the room, and also the people that join us via video conference. We are very proud and honored to host this first International Blockchain Day together with our partners, Digital Asset Association Austria and OeNB. We are here today in a very historic room, the Kassensaal of Österreichische Nationalbank, the Cashier's Hall. In former times, there were a lot of cashiers' desks here in the room where transactions were carried out via cash and in person. These traditional forms of payment are still very important for central banks and are still supported by central banks in order to offer a diversified means of payment. However, we have moved, as you can see, all these cashier desks to a different place and have rebuilt this place to host events like this with very good electronic equipment. I think this symbolizes the development we see. We still have these traditional forms of payment, but modern forms of payment like electronic payment and digital payments are getting more and more important. One major initiative is the digital euro, which is well discussed in the public, and mainly a mean for retail payments. But today we are not talking about the digital euro for retail payments. And saying this, I'm glad that nobody leaves the room now, because now I think we met your expectations. We are talking today about a different form, which is, I think, at least equally important than the digital euro project for retail payments. It's the digitalization of central bank money and the use of central bank money in this context. And as a central bank, we recognize the importance of the developments going on in terms of digital assets and asset tokenization, and MiCA brings a lot of new opportunities to that. However, as a central bank, we are mostly interested in ensuring high level of security in this type of transactions using this distributed ledger technology and the payment means behind that. And we therefore support very much the approaches taken in cash settlement in central bank money. That's also the reason why we are very actively participating in the ongoing exploratory work of the Eurosystem that are currently investigating the use of digital assets in central bank money and in the interoperability solutions with all participants. We are very pleased that we can report that we have only recently finished, recently means beginning of this week, a project together with Banque de France, successfully finished it. And I'm glad that we will today have the opportunity also to talk about these solutions in the first part of this very interesting program. Without further ado, I would like to wish us a very interesting day and look very much forward to interesting and fruitful discussions on the different topics, and wish you a nice day, a successful day, and also then a nice evening in networking at the end.
Thank you very much. Good. So my name is Pöltner. I'm chairman of the DAAA. So what is the DAAA? The DAAA has the goal to support the ecosystem in order to enable it for digital assets. We have 4 working groups. We have tech, legal, business, and regulatory working group. And we have our, let's say, events that we organize in order to bring the people together. What are we going to see today? So we have 4 main activities. We start with CBDC, wholesale CBDC. From there we go to banking. From banking we go to stablecoins. From stablecoins we go to asset reference token. And then we go to the networking and can discuss everything again to see where this leads us to the discussion for today. As pointing out, we are at the beginning of these developments and we see a great potential that's coming to us. So it's really, I think, also important in the networking event that we discuss these topics. And it's really great that we have so amazing speakers to be here on stage in the panels that we can discuss these topics. So about the DAAA, already pointed out some of the main activities. We have a lot of companies from the Austrian ecosystem within our association. And what we are also trying to do is to interconnect internationally with other organizations in order to exchange the ideas, see what's going on in order to support the European ecosystem going into that direction. And also, maybe not so many people or everybody knows what's happening in Austria. We have different landscapes. We have the blockchain ecosystem, Austria, where you can see what is going on, which companies are already working in this industry. And also we have from OeNPAY the fintech landscape, where you can also see different companies that are working in that direction and trying to enhance our ecosystem of the near future. So with that, summarizing what the DAAA is, I really would like to start with the first part about CBDC. And for this, I would like to ask Paul Wessely. So after Paul, a second Paul from OeNPAY, please come on stage and take care of the next panel. Thank you very much. Big applause.
Hello and good morning from my side as well. As Paul just said, my name is as well Paul Wessely from OeNPAY. I'm in fact there a Senior Innovation Manager at OeNPAY Financial Innovation Hub, which is a daughter company of the Austrian National Bank. We are focusing in fact in fostering and strengthening the payments and payment system in Austria, but as well in Europe. And for that, innovation is quite important part. And as you can see today, we have 4 keynotes now at this session. And a panel afterwards, which in fact is focusing on the development of digital assets and wholesale CBDC, wholesale central bank digital currency. And of course, this is an innovation. This is something new, and because of that, I'm quite proud, in fact, to host this panel and the keynotes. Talking about digital assets and talking about CBDC as a whole, especially wholesale CBDC, it's kind of 2 sides of one coin. Because we have digital assets like security tokens, like crypto assets, and so on. And we're really talking about growth, which is expected to be like 10-fold, 8 times growth until 2030. We're talking then in the areas of 16 trillion US dollars by 2030, quite a lot. And just talking about the asset sides, we need, of course, in interbanking, we need to settle that. So we're talking about the cash leg. And up until now, of course, we have the central bank money to do that. And the question is, which will be as well a question after in the panel, do we need a digital currency to do that? Do we need a wholesale CBDC to do that? In fact, looking at the picture, already 134 countries and governments and national banks, in fact, are working on CBDC. So we're talking about roughly in the areas of 98% of the GDP, the world GDP, in fact, is really trying to get a CBDC in one way or another. And just to mention, like before, we are focusing now really on wholesale CBDC and not retail CBDC. So I'm quite proud, in fact, to announce the first keynote speaker, Holger Neuhaus from the European Central Bank. He's, in fact, head of the ECB's Market Innovation Integration Division. And his division, in fact, develops the ECB Eurosystem's approach in relation to innovation at all, so quite important for us, of course, and the integration in the fields of payment. So as just said before, innovation is really driving payments quite a lot. And of course, he's coordinating the Eurosystem internal work and is the chair, in fact, of the market contact group on settling wholesale financial transactions, for example, with new technologies like DLT. So I'm quite proud to announce now the settling DLT transaction in central bank money, which is in fact the title of his keynote. And I like as well, of course, his call to action, yes, we can. Holger, please come on stage. Thank you.
Yeah, thank you. You can hear me, yes. So thank you actually a lot for the invitation here and actually for being here at the Österreichische Nationalbank at this event. So thanks a lot. So indeed, yes, we can, but actually, what is it that we can do? That was a question that we had also in the Eurosystem when we were approached by market participants and looked at that. We did a questionnaire to actually many associations in Europe, be it European one, national ones, had surveys, looked at that, discussed with the market, and came up actually a year ago, so at the end of April last year, we came out with a statement where we were saying that we will make efforts to ensure that central bank money will keep pace actually with and contribute to the digital innovation for wholesale financial transactions. And in short, it was a statement that if the market goes to DLT, that we will find a way of actually making sure that actually transactions can be settled in central bank money. Because we think that is actually important for the stability of the financial system, because central bank money is by design the risk-free asset that you can use for this. And I also have some further points on why this is important, and not only for the individual participants, but because the transactions are so large on the wholesale financial markets, that it's also for the stability of the whole system that actually this is being done. So what you see here is actually a stylized picture of what could be a DLT network. You see in blue up, you see in blue actually, you see the euro. These diamond-shaped points mean that actually something is on the DLT network. There are smart contracts there. There are different players. There could be commercial banks, CSDs, central bank, and maybe also foreign participants. And they all could work on platforms where there's money, securities, or other digital assets recorded as a token on the shared network, where there's a different operational role for players. The benefits that market, when we made this questionnaire, that I refer to, what they told us is that they like atomicity, so that settlements will take place if and when both sides of the transactions are taking place, or all conditions are being met. It's possible now, but you need a trusted party. This would here enshrined in code. Ease of reconciliation, and also this decentralized programmability. In brackets, I've also mentioned that also the hope is disintermediation. I have to say, people did not write that in the answers, but actually it's their hope, and they tell us in bilateral meetings, but of course, that's different. It may not be as acceptable socially, but that's also a point that the market might get more efficient. The third point is that central bank money settlement is needed to reduce risk and also as an enabler for innovative cases, which otherwise might not take place because players might think it's, yes, I want to actually I want to use for my assets DLT, but I will not go because I don't have a safe settlement asset. Still, whether this will be successful or not will depend on whether the market actually will find ways and will find good use cases and also can seize all the efficiency gains. That's not for us to do, but as said, the statement, as I read it, is that, well, we will find a way to settle. A last point is also important. If there's not a full migration to DLT at one point in the Big Bang, one will have, given the size of the market, will have a long coexistence also with the existing assets. So, but how could we do this? How could we settle in central bank money for parties who have access to central bank money? So we have a network in the picture on the right side. There's a stylized market DLT. There's a security on it. what we could do is we could work with an interoperability approach. So we could actually settle in our existing technology. So if a security is being sold, then the ownership is transferred, so there could be a payment in existing target services or in the technology. For example, in T2 or in our instant payment, for example, system. And that's the approach that the Bundesbank and the respectively Banca d'Italia have developed. Another possibility with the same logic is that central bank money will no longer be in the traditional technology, but actually on a DLT. That's the approach that Banque de France has developed and actually has put forward now, and that we are testing. So, but the logic is the same. So the transaction is here, and then the payment is done in central bank money, which is then actually recorded on the DLT. Does it mean? Does it have to be that way? No, there are also other possibilities. So asset and cash can also be on the same platform. And one thing is, of course, to find out how will that work, what are differences there. So that those approaches could look like number 3 here. For example, the Euro system providing actually the cash and a platform where the cash and the asset are actually both recorded. And the Euro system runs it. So that's one, that's the third solution. These here are like, we're using existing technology. This is like putting T2 on DLT. This could be then something look like what we have as T2S, but on DLT. Or we do something that's akin to banknotes. We put them in circulation. So we would actually give the cash away on another platform. Of course, we would have to control that. So and of course, that could be one or it could be several. Those are the theoretical options on that, and one can do also hybrid solutions there. The interoperability, the features here is that we, the central bank, would offer a cash leg, and then the market takes care of the asset and whatever is being developed. It's relatively easy to do. There are questions raised by market participants of what does it mean for the ecosystem. Would be defragment the market, where we have spent a lot of time to defragment it, would we refragment it? Those are questions and still have to be investigated. Then the other solution number 3 and 4 that I mentioned, asset and cash being brought together, they are rather demanding to have a platform that is attractive enough to do this. It would require either from us a big operational role, or if we give the cash away on another DLT platform that we don't control, we would have to make sure that those controls will be there, because central bank money is safe only if it is controlled. Not everybody can double spend it. You might like it if you can do it, but you would not like it if others can do it. So and there we might actually have requirements on the governance that will be difficult to accept for other parties, because we wanted, well, a strong control on this. We go for this now in our trials now, and for us we think it's actually a no regret move, and I will explain that a bit later also. So actually in our practical work, as I mentioned, we have the 3 solutions that you have seen on the picture by the Deutsche Bundesbank, Banca d'Italia, and then Banque de France, who are also here today. We do experiments, so that's a mock settlement, so we pretend it, it's a test, but also trials, so where actual settlement takes place, so real transactions in central bank money for a limited period, so from 13th of May to the end of November. We do that, I mean, we say, and you see this disclaimer, the footnotes are always the most important in reports by central banks, by the way. No, but we don't make a commitment that this will be implemented. We do not make a commitment that something will be implemented, because there are, as I said, there's also the point of will the market go that way? But we have this interest that central bank money settlement takes place where it can take place, and hence we will find a way if the market really goes for the DLT. So in the first wave, we have actually 10 market participants and 6 market DLT operators who are there. We also have now a second wave where the deadline was end of April, so we are looking at that. We don't publish the results, but there's a strong demand for that. So larger than the wave 1, because everybody needed to get their act together, find partners, and for innovation work, that's also sometimes difficult to do, so the wave 2 will be larger. We will actually look at both securities-related operations, issuance, trading, maturity. Market participants are free to also do other things, corporate actions if they want to. We do also payment versus payment, I mean delivery versus payment. We also do on the FX side payment versus payment, plus automated payments, for example, a deposit token that a bank has for the customer. There should something happen with that, for example, a transfer to a client at another bank, and central bank money could be the interbank, could actually mimic the interbank transaction there in between the two banks, so that the transfer is successful, so automated and linked payments. So they also will be part of what we are testing. So it is quite broad. And of course, as already said, I mean, we were very happy that when we started already on the first day, it was not only that the season was opened, it was actually the Österreichische Nationalbank who made the first transactions. It was an experiment. And of course, that was good to see that all the preparation has paid off. So this was the first experiment, but then many more experiments and also trials with actual settlement in central bank money will follow. How will the future look like? So central banks are getting ready, and the Euro system is actually among the first central banks to do actual transactions. So we are, well, I mean, really leading in the world, I mean, with some other central banks, of course. Like the Swiss National Bank. They are also very, very active, but we are really among the first to do this. But how will the future look like? Will we have actually a future where there will be many proprietary ledgers, which are easy to set up, easy to control, but again, how to manage then the fragmentation of the market? Will there be regional ledgers or use case specific ledger? One ledger for the travel industry who has their own requirements, one for the financial industry, one for producers who want to manage their supply chains and they have their specific needs? Or will there be a general all-purpose ledger where everything comes together? Don't know. And actually I will be happy to learn also from what others are thinking about this. Of course, the more specific it is and easy to set up, yeah, it's time to market is quick. A general ledger, all-purpose, looks very nice unless you have experience in setting up a governance for something that works worldwide. There are many different interests, so setting this up is quite a challenge. Just think of geopolitical situation, think of how operational, for example, I mean, United Nations bringing everybody together. So that's a question mark, and even once it's working, how do you keep it up to date? So those are questions where one has to see really what the trade-offs are. And for us, again, we think that actually one ledger to rule them all, so to say, that's a very difficult part. So there's always some interoperability needed because there's always some innovation, some new players, or some needs that have to be catered for by other infrastructure, or other platforms. So for us, being able to make interoperability is important. That's why we said this is a non-regret move. So that's for us is important. So we are on a good track there, and we'll learn then actually from this for our work and for future decisions that we will take. What is also very important is that even if there's a common ledger, common protocols, standardization of concepts, etc., is very important because otherwise you have one ledger, but people don't speak the same language. Well, you will not realize those points. And I think that is what I want to conclude. There is more when you get the PDFs, so there are links behind that with more information about that you can look up with details about what we are doing. Thank you a lot.
Thanks a lot, Holger. I think you were making quite a lot of teasers, which keynotes are coming up next. In fact, we have a team now today. We have Mathieu Herbeau from Banque de France and Johannes Duong from the Austrian National Bank, as you just teased now a little bit. Mathieu has been working for the Banque de France for over 3 years now. In fact, he is quite involved in several wholesale CBDC experiments. and of course is playing quite an active role now in the trial and experiments of the Eurosystem exploratory work on new technologies, especially here now for central bank money settlements of wholesale financial transaction. Johannes, in fact, is over I think more than 10 years now at Austrian National Bank, is now working at the Treasury back office department for settlement and collateral management. He's quite involved in a lot of the fintech topics and blockchain research projects, for example, DELPHI and Citadel in the Treasury department. And in fact, he will talk of DELPHI today, and Mathieu will talk about DL3S, a lovely abbreviation for Distributed Ledger Securities Settlement and System. So as a team, can you just come up to the stage, and a big welcome. Thank you.
Can you hear me? Okay.
And me?
Yeah. Okay.
We're a team, sir.
So before why we are doing this, I would like to repeat so the settlement world now, because you see here there's a fragmented world, and at the moment when we sell or buy securities for the settlement, we use SWIFT, we have intermediaries and all these, so it takes time and cost. But and after the blockchain technology came up, and we see that there is an impact on our daily business regarding the settlement workflow. And it could, as Holger mentioned before, it could reduce costs and more efficiency and so on. But there were also a lot of drawbacks why intermediary could be important for quality securities. Yeah, and in our innovation lab, we have an innovation lab, I will come back to it later on, is we started with the Projekt DELPHI, thanks to our IT colleague, he's here today, Paul Pacher, who really realized this project, is together with the RBI, the CSD, and Erste Group, and Austrian Treasury. Together, we created this platform, DELPHI, for simulation and mock transactions. And the idea behind is to learn as much as possible, to gain key learnings, and also contribute to the ECB with our experiences and for further discussions and decisions. Important is the OeNB, we are not intent to issue a wholesale CBDC. This is only in our platform a sandbox simulated for testing, because Holger is responsible for this. Yeah, and regarding the innovation lab is created, I think, 5 years ago. So there's a possibility for all departments and units to hand in ideas beginning from AI to blockchain or other possibility. And then there will be a jury to find out which of the project could be realized. And the important thing is a failure is possible. And the idea behind is to learn as much as possible and to find out what are the impacts on the central bank in the future. And DELPHI was created by the innovation lab. Yeah, and regarding DELPHI, we have 3 streams. So the technical stream, so is led by the OeNB, the IT department, and there is a legal stream led by the RBI, and the most important one is, of course, the business stream. You know, we have the technology, even the legal is possible, we need business cases. This is something that we all discussed about, is what are the business cases for the commercial banks and so on. And of course, we are also observed the MiCA, the DLT pilot regime, and what are the impacts on our daily business and on a central bank. And yeah, and so the project scope here is when we in a DELPHI project is we discuss a lot with our stakeholders, and Hubertus is also here today of the CSD side. So the idea was, so on the left side you see that there are many intermediaries, many regulations at the moment. So and to use a full disintermediation, so there are no rules like the crypto assets at the moment, peer-to-peer transaction. The problem is there was a lot of risk and speculation and so on. So that's why we chose the option of partial disintermediation, and important to have even the technology enables us peer-to-peer transactions, we need still intermediaries to make sure that the quality is secured, that the settlement is secured, and the emission is secured, and all these stuff. The quality management is very important. Yeah, so beginning the technical stream, so we have a sandbox. It's important to note that it's only a sandbox for mock transactions and simulations. So we experiment with the smart contracts, and what are the drawbacks, what are the advantages of using this technology in comparison to using SWIFT. And we also transfer the tokens from A to B and try to make also errors to find out what are the contingency cases. And in the use case 2 is especially important for the commercial stakeholders are the secondary market. That not only in the primary market, the token should be also delivered to the secondary market, and for the possible access to these assets. Yeah, and the legal stream, there is also legal stream. There is an amendment in the Deposit Act, so that's to make it possible to digitalize securities. And in the legal stream, we have lots of discussion with the legal expert. I must say I'm not a legal expert. Sometimes I do not really understand what they discuss. So what we discuss a lot, really a lot, about does this security token correspond to the actual Austrian legislation and all this stuff. So, and try to find a way, in case of our prototype, using it for a real world environment, how is it possible? So this was done in the legal stream. And as I mentioned, in the business stream, this is the core stream, the most important stream is there are some use cases are integrated in the digital collective certificate is the Projekt 3i of the CSD. So if you want to know more later in the break, Hubertus is here. He can tell you more about this project in the CSD. And of course, cost saving and long-term decommissioning. One of the most important part is what are the new possible what are the new digital markets in the future? Where could be new possibilities gained by this new technology? And of course, there are challenges also, like what is the integration into the core system. Evaluating the cost is quite difficult because each institution has its own legacy system, and it's hard to find out what are the cost savings. So to find a general summary for this is quite difficult. And of course, the scalability, a DLT or a blockchain, it has a limited number of transactions technologically. So in the legacy world now, we have very huge transactions per day, really huge transactions. How could a DLT manage this? Yeah. And what are not in scope is definitely energy consumption. So the discussions regarding environment, this is not part of our project. We had not the resources to discuss about this, and it's important, but we cannot really cover it. So the economical aspects and of cybersecurity. Error handling at the beginning was not in the scope, but now later on stages, it was the unhappy path is more important than the happy path. You know that a transactions tokenization works, but what happens in case of error or for example, we use the hash time lock contract for this experiment, also for locking the assets, and in case you cannot pull out the assets anymore, it's stored in the contract forever. What's happening? What are the contingency cases? And of course, client reporting and taxation. Yeah, and the key points of this was is to find out to differentiate between traditional assets and new digital assets, because we discussed a long time regarding the security tokenization and so on. At the moment, I must say the legacy system has a really error-free settlement possibility, and it's regulated and so on. Yeah, so does the DLT really brings new advantages for the security settlement? So the idea is, and the topic is to differentiate between traditional and new digital assets, new markets for the partners. And of course, the thing is, the cost-saving part is when an institution introduce or using DLT technology, it still has its legacy system at the beginning. So you have both systems running, so it's causing costs. And the thing is, after some years, okay, the institution can shut down the legacy system using DLT only, but where is the break-even point? How many years do you need for the cost savings to justify the cost you invested for running both systems? So all these questions, it's really hard to answer, but we figured it out that it's important for the top-level management for further decisions. And of course, the business cases evaluation, what are the target groups, and permanent legal assessment, public versus private blockchain for that. This is very important. And be aware of the silos, you know, that there are lots of ecosystem now coming out. Still, there are interruptions again. So maybe you need something between different DLTs, so maybe we come back to the old world in the fragmentation. So all these points is important to be aware. Okay, I will pass over to Banque de France.
Thank you, Johannes. Thank you for the invitation. I think you pointed a lot of questions, and we don't have the answers yet, but hopefully the exploratory work will help us in moving ahead on evaluating the different topics. So I want quickly to... You've seen that slide more or less from Holger already. So tokenization is happening. I think when someone like Larry Fink of BlackRock says that it's the next big thing in the financial market, it's definitely something that we need to also be interested in. So tokenization is a promising technology using distributed ledgers where assets will circulate with the objective of making transactions more transparent, cheaper, and faster. This was already alluded to by Holger. So in order to facilitate this tokenization, we believe that central bank money is the safest asset that can be used for this and the most liquid as well. It's currently not available in tokenized form, but the Banque de France has for quite a few years now, felt that in order to ensure atomic settlement, the best way to do that, and that's what we experimented, was to have cash on the ledger and in the form of tokenized central bank money. But this was just experimental. So we ran quite a lot of experiments over the last few years, since 2021. We did a lot of experiments on securities on one hand, and also doing PVP and FX. So here you can see there is quite a lot of information, but we did experiments on public DLTs, private and permission DLTs. We also did cross-DLT transactions. We also used the traditional systems for the funding and defunding of the account. All of those experiments have had reports published, so if you look for more information, you will find that on the web. And also, Banque de France did a comprehensive report on all these experiments. Some were doing PVP and DVP, so we were quite ready, basically, to offer a digital ledger for the forthcoming exploratory work. In the second phase, we had another big three experiment, Project Venus, Project Mariana, which went into looking at the automated market makers, and also the Swift CBDC sandbox, because I think that was mentioned by Holger as well. Interoperability is definitely something that will be a key feature for the forthcoming period. So with a large amount of banks, central banks, we experimented interoperability solutions already with leveraging the Swift sandbox. Here again, the use of private permission ledgers, cross-DLT transactions, and the use of traditional systems was tested. So this slide is very much like what Holger has showed you before. There are many options that can be tested. The interoperability, is what we are currently doing in the exploratory work, but also an integrated solution where the securities and the cash settlement asset would be on the same DLT, which could be Eurosys and DLT, and the distribution where the settlement asset actually goes onto the market DLT. But at the same time, we have also the trigger solutions, which have been promoted by the Banque d'Italia and Bundesbank. So here, I will hand over to Johannes, because this is a brief description of what we did together.
Yeah. So what we see is for our first experiment is, so we provide with the DELPHI side on a public blockchain the asset. So we tokenize an existing Austrian government bond, just a simulation, and connect it to the DL3S for access to the wholesale CBDC that is provided by the Banque de France for the DVP settlement and atomic settlement. And we are using the technology H-time lock contract for locking the assets and also the possibility to pull out the assets. So the first experiment was successful for the happy path, but the more important thing is what's happening if the APIs is down or we do not have enough cash token or a partial settlement. All these use cases we would like to also looking at with Banque de France.
If I may complement, of course, the exploratory work is designed for that as well. So it's testing the unhappy path. We have preliminary tests before we actually do the experiment. We've had some unhappy path in our situation. We've had where the technology basically was down or whatever. So we work on those unhappy paths. As part of other forthcoming experiments, we also have some tests where we test contingency scenarios or an happy path like a lack of cash or a lack of securities. How does the HTLC manage that? So this is clearly part of what we are aiming to do as, in this scenario. And thankfully, we had a positive outcome on Monday, so we're very happy to have partnered with OeNB on that, and we leverage on that good relationship for forthcoming work. As the first phase of this exploratory work goes until November, we will do more experiments with the OeNB, leveraging on the same technology. So as a conclusion, I would say that DL3S, the DLT that Banque de France has been building for the last few years is ready, of course, for the interoperability, because this is what we are doing at the moment. It has, through the past experiment, operated as well under a more integrated model where both the security and the cash settlement asset were on the same ledger. This is why it's called DL3S, is Distributed Ledger Security Settlement System. It can also settle securities. And eventually, it could also operate in a distributed fashion that was tested in other experiments where the settlement asset is sent on the external ledger for the settlement. That's the bottom scenario. We decided not to have questions and answers, I'm afraid, but it's my last slide. However, I will be delighted to answer anything that you wish during the forthcoming coffee break.
Oh, be careful on this stage.
So thanks a lot, and of course a big thanks that you of course timed your success of your experiment on Monday, and it was first day, just for our first blockchain day. And as you can see, of course, there are a lot of happy parts as well in the trials and experimentations, which is quite great. I think it was mentioned before that European central banks are working quite heavily with a lot of innovative power, in fact, on CBDCs. And so we are switching back to another central bank, to the Swiss National Bank, and in fact to Philipp Müller, which will accompany us by WebEx. Philipp is a senior economist of the Swiss National Bank, and in fact is dealing quite some time with the cashless payment system in Switzerland, analyzing the Swiss real-time cross-settlement systems, looking into central bank digital currency as a whole. He was involved as well in the Helvetia project of the Swiss National Bank, and of course he's looking as well in issues related in the interoperability of DLT-based and traditional finance market infrastructures. So and there he is, his note will be on settling token transactions in central bank money. Philipp, please go ahead. Thank you.
Perfect. Thanks a lot for the very nice introduction. Let me share my screen with you, and apologies for not being in Vienna. Unfortunately, it wasn't possible to make the long way from Zurich over to Vienna. I hope, yes, you should see my screen now. So I will quickly talk about SMB's experience on settling token transactions in central bank money. So what you see here is basically a depiction of the three different approaches that we are looking at SMB when it comes to settling token transactions in central bank money or in other forms of money. We're looking into three approaches. One approach is actually to use wholesale CBDC, so a digital currency that is issued by the central bank and that can only be used by commercial banks as other electronic forms of central banks as well. Another approach that we're looking at, and that is similar to the trigger solution that was mentioned in the last presentation, and we call it the RTGS link, where we try to synchronize the settlement between a digital asset platform and our current real-time gross settlement system, so with the traditional world. And the third approach that we're also investigating is basically a digital token money that is not issued by the central bank, but that is issued by a private institution. And here we're looking into how can we make that token money safer, and especially safer in the case of bankruptcy of the issuer. We call it, it's a bit of a cumbersome name, but bankruptcy protected token money backed by central bank money. So those are the three approaches we are looking at, and we try to investigate which one is better suited for settling token transactions. I will only talk today about two of the approaches. First about the wholesale CBDC, and then later on about the RTGS link. So for the wholesale CBDC, we in Switzerland are in the midst of what we call Helvetia Phase 3. So there have been Helvetia Phase 1 and Phase 2, two experiments we did in test environments, also together with the BIS Innovation Hub. And now in Helvetia Phase 3, what is different, we basically moved to productive environments. So we're talking here now about real value transaction in productive systems. And to make it a bit easier to handle and not open up the scope too much, we actually decided on investigating three distinct transactions as part of our pilot. The first transaction is that we support the settlement of primary market allocations of bond issuances on SDX, and this is Swiss Digital Exchange, a digital custodian in Switzerland with wholesale CBDC. So a bank and their issuer, they can decide to issue a bond on SDX, and the settlement of the primary market allocation can happen in wholesale CBDC. Then the second transaction we look at is actually going into a topic that was also mentioned before, I think by Johannes, on how to bring the old world and the new world together. And what we looked at or are looking at is on how can we make sure that a digital bond can actually also be bought by a bank that is only present in the traditional CSD. So we also supported there a new use case to allow for such cross-CSD settlement in wholesale CBDC. The last transaction we're looking at is actually something we only do in test systems, because here we're not as advanced as for the other cases. And here we're looking into how a repo transaction can be settled in central bank money on a platform like SDX with wholesale CBDC, to figure out how that the settlement layer can be integrated in the trading layer and also in the administration of a repo trade and the relevant systems there. So we're almost at the end of our project or our pilot. It will be completed by the end of the first semester of 2024. So it's only 1.5 months left in that pilot phase. So very quickly now, we use wholesale CBDC. Now the question is, how do we bring wholesale CBDC to the platform of SDX? And I try to depict it here on the left-hand side. So the process is very simple, and it's basically in the hands of the bank. And in that case here, we have Bank 1 who wants to get wholesale CBDC on the SDX platform. The only thing they need to do, or that bank needs to do, they actually need to instruct a payment in the SIX system, so in the RTGS system, which basically credits the SMB account. Once the money arrives at the SMB, then an automatic flow of information will go to SDX, and wholesale CBDC will be created on SDX, and the bank can use it, for example, to buy one of the bonds I mentioned before. So it's very simple, and it's basically all in the hands of the bank doing it. From a balance sheet impact on the SMB, and that's something we were very cautious about. Basically, the change between wholesale CBDC and traditional central bank money didn't really affect the length of the central bank's money, of the central bank's balance sheet, but only the composition. So down here, you can actually see pre-tokenization, we only have reserves and vault cash. After tokenization, we still have reserve balances, but less of it. But we have wholesale CBDC and vault cash still on the balance sheet. So even though we have issued wholesale CBDC, no change to the balance sheet composition. So what did we achieve so far in the pilot? Together with the 6 pilot banks that are depicted on the left-hand side, actually a lot has happened already on the platform and is still to be happen in the next couple of weeks. So we saw 4 bond issuances so far that have settled with central bank money on the SDX platform. And we will also see a couple of more probably in the upcoming months. One thing that was just announced yesterday, and we are very happy about, is that also the World Bank decided to issue a bond on SDX, and settlement will happen also in wholesale CBDC. So now changing to the second approach, the RTGS link that we are also investigating, and it is very similar to the trigger solution. Why are we doing it? I mean, we are also mainly doing it because we see a lot of interest in such synchronization mechanisms from our colleagues from the European Central Bank, but also from our colleagues from the UK. So we thought, well, why not also look into this topic that could be a viable option to settle token transactions in central bank money. The good thing then, when we started looking into it, is that in Switzerland we already have a solution that could serve as an RTGS link, and we call it normally third-party system functionality in the SIX system, and it's basically a functionality that allows a third party to trigger payments in the SIX system on behalf of 2 banks. So on the left-hand side, again, the schematics of the RTGS link, what happens is basically Bank B and Bank S, in that case, they agree on some platform on for example, an OTC trade. They inform the operator that this DVP settlement should happen. This is step 1, and then the operator blocks the asset side on its system. Once the assets are blocked, the operator will instruct the SIX system to make a payment from Bank B to Bank S, so from the buyer bank to the seller bank. Once that transaction has settled in central bank money, confirmation goes back to the operator. He knows that the cash side of the DVP has settled, and he can then also release the asset side and making a DVP happen, even with tokenized assets. The questions we were investigating were mainly whether this functionality that we already have in place and is heavily used by non-DLT based operators, of course, whether this is also suitable for settling tokenized transactions. What is also important is on how that solution will compare in the end to an integrated settlement such as wholesale CBDC. So this is a very brief overview on what we at SNB in Switzerland are working on. So we are looking into, just to summarize, into 3 different approaches: wholesale CBDC, RTGS link, and a bankruptcy protected stablecoin. So thanks a lot for having me and for your attention.
Thanks a lot, Philipp, and thanks, of course, to him that he was not really missing a beat. I think 4 or 5 times he was called now. Quite a man he's wanted, I guess, in the Swiss National Bank. But what you can see, in fact, now is, even if you talk about the old, let's say, system of a national bank, that the banks that are really working quite innovative on this new technology and doing a lot of trials, a lot of experiments. And the 3 keynotes now were on the one side of the picture, in fact, one side of the coin. We were talking about the wholesale CBDC, but now Robert Oleszak is coming, in fact, from the Bank for International Settlements Innovation Hub. He's an advisor at the Swiss Center of the BIS Innovation Hub, and he's working on projects with central bank digital currency and tokenization of financial instruments. He has had quite a wide experience, professional experience in the fields of financial markets, infrastructure, regulation, and so on. And now we're talking about the digital asset side, because he will talk about the project Promissa. Please, Robert.
Thank you very much for the invitation. I'm very happy to talk to you in the next 10 minutes or so about Project Promissa, which is one of the many projects that the BIS Innovation Hub is doing. And in fact, it's, I think, a very nice use case of the advantages of the value that tokenizing financial instruments can bring. So what is it about? It's a proof of concept for tokenized promissory notes used by the World Bank and other international financial institutions. So it's a project together of the BIS Innovation Hub, together with the Swiss National Bank and the World Bank, and the IMF is acting here as an observer. There's also a role, and I will come later to that, for the Austrian Central Bank, so stay tuned. Now today, I think that's kind of a background where we are coming from today. So today, international financial institutions, such as the World Bank or the IMF, are using paper-based promissory notes to fund part of their operations. Now, in this kind of transactions, there are 3 parties involved. It's usually a government which promises to pay something to the, let's say, to the World Bank, and this promise is written down on a piece of paper called promissory note. This promissory note is then moved typically to the central bank, which acts as a custodian, but also conducts payments for the government to the international institution. And so every time this payment is done, the promissory note is taken out and written and kind of changed and written down that the status has changed. Now, as an example, so what does that mean? For example, the International Development Agency, which is part of the World Bank, is currently in a replenishment cycle and has managed to receive $93 billion. And $25 billion of these 93 are actually member contributions that are being paid across the globe. And a big chunk of this are paid in promissory notes. So promissory notes are really, really important in today's international financial institution system. Now, what we are looking at is to tokenize these promissory notes. But why are we doing that? Because there are several pain points involved in the current system. As you can imagine, dealing with paper-based promissory notes contains a lot of operational risks. So you have manual processes that you need to take care of. You know, these paper-based instruments can be lost and so forth. Also, what is important, there are many parties involved. So each of the parties are keeping 1 or even 2 or maybe sometimes 3 separate ledgers. And these ledgers need to be reconciled. You can imagine there are many messages going back and forth between all these parties until you really have a consistent view of the current state of the promissory notes. this is not only takes a lot of resources, lots of people are involved, so you want to make that more efficient. Now, how do we want to make that more efficient? We are looking at tokenizing these promissory notes, and this token would contain a core where you would record all the information that you expect to have on a paper, but that's not all. You will also have a token service, and the token service contains the rules and logic which governs the life cycle of these promissory notes, and that's the basis of automating certain processes. Now, these tokens would sit in a distributed environment with immutable data structures. That would not only provide a single source of truth to everyone, but also support confidentiality. So that means, for example, the World Bank would see all the promissory notes that are issued towards them, but each country would only see the promissory notes they have issued and not the other ones. So that's very important. Now, what is also important is, and what we can also support is that any changes throughout the life cycle must be agreed by both parties. Only then you can have a new status in the promissory notes. That's kind of a dual signature that I'm showing here. So it also supports these kind of features, and you can do much more many things that you can do today with paper-based promissory notes. Now, sounds all good. Now, what are the challenges in this project? I argue they are twofold. Okay, so it's how do you increase the participation in the platform once it's built, and also how do you increase the integration of the platform into the organization of each party involved. Now, currently, we are at the innovation starting line. So what we do is we address the pain points I've been talking about, and we also show that we can actually meet the basic requirements, confidentiality, dual signature, and so forth. And we also conduct testing, not only with the World Bank at the Swiss National Bank, but also with 5 to 6 interested central banks and their ministries of finance. And I'm happy that the Austrian Central Bank is very much interested to be part of this testing, which will happen later this year in summer. So we are very much counting on you on that. But to make such a platform really useful for the whole world, we need to increase the number of participants even more, because then this allows you to reduce the costs. But that's not sufficient enough, because how do you create value for the users? And I argue this is by increasing the integration of these systems into each participant's organization. Only then can you achieve automation, standardization, and thus have a more efficient process. But maybe that's not enough. Maybe we also need to look into how can we incorporate the payment aspect of these promissory notes. And that's kind of connecting to the CBDC use cases that we had discussing before. And also how can we extend new use cases that are currently not possible because everything is paper-based. So you can have more financial instruments on this platform create more value. But of course, doing all this is costly. So what you need to do is actually increase the participation and the integration, which allows you to this big leap into creating a platform that is useful for all the participants involved. And the question is, how do you go from the current experiment that we are doing into the big leap? And here, I look to the Alps. What you see here are the Eigermönch Jungfrau from my hometown in Bern, in a nice weather. But I call them here cooperation, coordination, and consistency. What do I mean by that? It takes a cooperation not only between international financial institutions, but also with the central banks and with the ministries of finance. So there are many, many parties involved. And the BIS Innovation Hub, as part of the mandate, is providing this kind of cooperation. So the Innovation Hub has exactly been set up to explore new technologies and how they can create value for their shareholders, the central banks. So that's our part. But these kind of changes do not happen overnight. So those are mid to long-term projects. So consistency is very important. You need to keep on pushing the projects. And that's what we are here for the BIS Innovation Hub. together with the World Bank, other international financial institutions, and central banks. So with that, I want to close. Thank you very much for your attention.
Thanks a lot. And now we're starting, in fact, a panel discussion. So I can please come up, Johannes, Mathieu, and Holger, please on stage. We're sitting down now and have some lovely questions regarding wholesale CBDC and digital assets. Perfect. And I want to start this round, in fact, the beginner's round, and this panel discussion with quite an easy question, maybe. It sounds like an easy question, maybe it's a little bit more difficult. Why do we need wholesale CBDC? I will just maybe put into the circle and discussion circle some pros and cons now. Of course, the pros will be that with a safe and liquid settlements instrument in a DLT environment, that's one point. Then, of course, the central banks could really create here a really stable financial infrastructure, therefore, of course, increase the financial stability. And, of course, the adoption of digital assets will be quite enhanced. But there are a lot of cons as well. The main con, of course, it already exists, in fact, wholesale CBDC, because the reserves are central bank money in a digital form. So why do we need something new? And a DLT, of course, poses some risk and complexity. And talking about cybersecurity and, of course, reputational risk for national banks as well. So we have pros and cons now. And I will start with Johannes, because you just hear my point of view. So from your point of view, why do we need wholesale CBDC?
So for settling digital assets, when it's better on the same platform and it's more efficiency, and of course the rising of stablecoins under MiCA. So what is the role of the central bank in the future? Because stablecoins are issued by private institutions, so it's important also to have a role in the future for central banks.
So, in fact, you're saying that working with DLT and the wholesale CBDC, the national banks are anchoring their role in the financial system, in fact.
It could be a potential now to have an anchor in the field. Otherwise, the stablecoins are rising and the institutions will use the stablecoins instead.
So we're talking about the central bank, and so of course of that I'm looking to European central bank, to Holger. Where do you see the pros and cons, and why do we need now the wholesale CBDC?
Well, actually, so the first point is, what is wholesale CBDC really? And I think in our presentations we have not been fully always consistent in the sense of what we mean exactly, because arguably, so wholesale financial transactions are already settled now, and as you said, we have already, since decades, digital central bank money for institutions, actually for settlement purposes. So it does exist. And then some people say wholesale CBDC is whatever is having this function, others narrow it down, and actually that was in the presentation of the Swiss National Bank now, that actually they use that term that if actually the central bank money is also in a DLT form, is there as a token. But these are okay definitions, so there's no right or wrong. It's a question of what do you use. And I think that generally all central banks have an interest that actually large transactions, for the reason that I mentioned in my speech, are actually settled in central bank money for reducing the risk. Yes, cyber risk exists no matter which form, so you have to deal with them, period. Reputational risk, well, if you do something well, the higher the top, the deeper the drop, so you always have some reputational risk, but you have to manage that, and you have to deliver. So that those are not really arguments of, I don't see that as a cons, it comes along with whatever you're doing. So from that point of view, I think that there is a case of continuing to offer a safe mean of settlement for large transactions, and that's what it's all about. Now, does this involve DLT or not? Well, I mean, we are now working in our Eurosystem trials actually with approaches where we actually use existing technology, where we use DLT. And I explained also there are others, even more ambitious one, where everything is on the platform. That will be a question of what does the trick, what is really useful and can work. when we had the stakeholder meeting after all these questionnaires that I talked about with market participants, they basically said, well, everything has to be on DLT, only that makes sense, because only then we have this real automation, we can make straight through processing. But if, for example, there are different DLT platforms, there's in any case a disruption there. It's not all on the same platform. So then nobody could say, what are the frictions really? Is it really so dissimilar if we settle in existing technology or not? So those are like empirical exercises we do. But it doesn't question the point that actually one needs central bank money settlement, at least for the wholesale financial transactions.
Okay, thanks a lot. And I will hand over to Mathieu now. I mean, the two now, in fact, were speaking about we need wholesale CBDC, in fact. But it seemed like the way ahead could be quite a rocky one, in fact. And Banque de France was making a lot of experience in this area. We're looking quite innovative in different ways how to do central bank digital currency. So what's your point of view, in fact, on that?
Difficult not to repeat what has been said already by Johannes and Holger, but maybe a couple of points. There is a risk that if we don't provide this type of assets, we'll see competition providing it. That's the stablecoins. Because some market participants wish to see whether having a token, which is the same nature of the, in a digital nature as the asset tokens, does that improve the whole process? If it does, and if central banks don't provide a tokenized money, others might do it. And there will always be a higher risk of using a stablecoin issued by a private issuer compared to the central bank money. So we probably ought to be there and not have our role taken over by a lesser quality issuer of settlement assets. Indeed, we at Banque de France, we did a lot of experiments. The idea was basically to answer to the market curiosity, I would say, around using this type of assets. As I mentioned in the presentation, we experienced on private DLTs, on public DLTs. The idea is really to get a feel of what will be best for forthcoming developments and be ready in case there is an actual appetite for this type of settlement assets. So there's a lot of unknown ahead of us, and I think this exploratory work period is definitely an opportunity for us to see whether that actually brings benefit or whether the traditional systems using a trigger solution or the tips hashing solution, does that cover the job, basically.
Okay, thanks quite a lot. I mean, one key point you just said, be ready for if there's somebody who's really saying, okay, the market is saying, okay, we need something like a digital currency, in fact, to settle here transactions. Now we've talked with the national banks, in fact, and now, Robert, we're talking about as well the Bank for International Settlements. From your point of view, do we need wholesale CBDC? Is the market, in fact, maybe providing stable coins which could do the trick as well? Maybe a little bit more risky, but maybe more cost efficient, something like that. What's your point of view on that?
Well, I believe that, as has been mentioned before, that the central bank's role is really to provide a safe asset for settlement, and I think that hasn't changed. Whether stablecoins are the safe asset, I have my doubts. So really, central banks have a big role to play in the future too. I just want to note, like, why are we doing all these experiments? I think the background is that the changes in technology were tremendous in the last few years, and also together with that, the preferences of the households, of the companies, and of financial institutions have changed. So now the question is, do we need to change our financial market infrastructures that central banks are using to provide this safe asset to better serve the needs of the economy? So I think that's the big question. And these experiments are all basically trying to approach these questions from different angles. We don't know the answer yet. So as has been shown before, wholesale or tokenized CBDCs are one of the possibilities, but there are still other kind of ways you could deal with that. So I think the answer is still out. But what we really need to do is be involved, try out the new technologies, and be really ready if something happens where we need to move fast.
Thanks a lot. You just mentioned now, of course, to be ready, and there are a lot of new technologies out there, and the progress is happening quite fast, in fact. I will now want to focus a little bit more, okay, who is leading this transition of the infrastructure towards CBDC or whatever is coming, which system is coming in the end? Who's leading? You talked about the markets, you talked about what they will need. If somebody say, okay, we need a wholesale CBDC, but maybe we are using stablecoins instead with all the risk, of course, involved. And of course, we have the governments, which maybe want to have a steering role, a framework role in there as well, and the national banks, which want to secure their role as an anchor for a stable, in fact, financial system. So I will make now the round in the other direction as well. And just talking to you as a business representative, who do you think should, in fact, lead the transition? Should it be the central banks? Should there be a cooperation, of course, with the market? Or is the market, in fact, the market knows better, let's put it this way, and they will develop the devices, the stablecoins they need, in fact? What do you think?
Well, I think it must be always, and I've touched upon this topic in my presentation, it must be always a cooperation between all parties involved. So it can't be that, the central bank decides this is a new technology and the whole economy thinks otherwise, that would not work. And also, on the other hand, if the financial market infrastructures or the financial institutions want to move in a certain direction, but the central bank isn't moving, that doesn't work too. So it has to be a cooperation. But I'm an economist, so I've seen a lot of situations where we are in a current state which is not good for anyone. So you can move into another state would actually improve the situation for everyone, but somehow we are locked in this state, and it doesn't work. If you just let the market decide, we will not move to the better state. So I think in such situations, and we have to be very careful if we are in the situation or not, but in such situations, I think it's very useful if a central player, it can be the central bank or the government or someone else, actually kind of orchestrate this move from status A to B. Whether we are currently in the state, I don't know, but I think we need to be careful about finding out if we are in a situation where need a nudge from someone to move from A to B.
Okay, so we're talking about nudging, in fact, to make this rocky road of the transition a little more or less rocky, in fact. Johannes, from your point of view, of course, you're part of a national bank. Will there be cooperation? Is there more the leading role of the central banks which are going forward, or will maybe the market put some stable coins already in terms of the MiCA in place, and the central bank will look at that as, okay, maybe we have to adapt our way?
So stablecoin exists already, so USDC and others. So there is MiCA in Europe, so I think it's important to cooperate between central banks, regulatories, and market participants, because as Holger said, the central bank money is the riskless, a risk-free asset, so that's important to keep it, and also to defend it. Because of MiCA and others, companies could access this market. So I think it's important to react.
Okay, thanks a lot. Mathieu, the Banque de France, I just said before, making a lot of experience in something like that. Do you see yourself in the leading role to change the system from within?
I've got to be very diplomatic and political because Holger is sitting next to me. Well, I think we were the first Eurosystem central bank to make such a push on the DLT aspect and on the tokenized form of money. Now, I think even though we are maybe a leader in that field, it does not mean, and I think the footnote on Holger's presentation was clear, that we will issue a CBDC and that it will happen on DLT. However, we are proud of what we did. We are pushing ahead, and there has been a lot of interest, I think, from the market surveys into testing the DLT format of the settlement assets. So we are very much involved in those experiments. We are very much looking forward to the key learnings and the performance indicators. I know it's a big topic for us, is what will we take from that phase of experiments? What will be the learnings, the positive ones, the negative ones? How will the different solutions compare? I'm not saying that the DLT is better than the trigger or hash link, but this period will help us in determining what has worked well for such or such solution, and what also can be implemented in the very short term or longer term. So to answer your question, I think we are leading the way at the Eurosystem level, but we are leading one way, not the best way, definitely not. That's the point of the current work.
Thanks a lot. Of course, the ending words is now for Holger from the ECB. I saw you made already some notes, maybe, and maybe you can give us an insight from which point, in fact, the ECB is seeing the whole development, this transition. Of course, you're doing a lot of work. You're looking into the different national banks under your umbrella, in fact, doing a lot of work. But how do you see the market, in fact, which, of course, maybe will act on a different speed and a different level? What do you see as the anchor point of the ECB?
I mean, it's not under our umbrella. I mean, we really have joined forces there to work on this as a Eurosystem, and we leverage all of the knowledge that we have that we have inside. I mean, the key point is, so one of the key points is actually market, central bank, governments. I mean, is it a versus, and who takes the lead? Actually, it takes all sides. In that case, it normally takes two to tango, but actually there are even more. Because, I mean, what is the activity in the market? So, of course, there have been experiments before, also by private market participants, including with the central banks who have been active looking into this, being prepared, and actually even doing more, reach out. But when is an activity happening? I mean, now, at this moment, of course, we just mentioned the first experiment, but there are many more to come, and the market actually came together. So so many were actually waiting. So it's not that we are only saying you should settle in central bank money. It was really, we don't want to move forward if there is not this risk-free settlement asset for us. Not just because of regulation, but we really the risk that we have to manage. So, and now what we will see, and again, I mean, the wave 2 is not decided, so I cannot say more, but there will be even more. I mean, significantly more interest in that. So we will see a lot of activity, which is a clear sign that actually innovation, so it's the market is responsible for this, but on the other side, it may be the case that if we are not active, the market will actually not take off on this. So it's to do in the dialogue. And then, of course, we decide as central banks on our own infrastructure and what we do with our money. But we do that in a dialogue with market participants because nobody has the answer now. What is the optimal way? And I mean, that's why we do that with the market, and we do that together. And there we will learn and see and take lessons, discuss that also with market participants, even if the decision of what we will do with our infrastructure, etc. I mean, that will, of course, belong to our central banks, but we will carefully do that in a dialogue. And governments, well, I mean, you need laws. So there are governments, there's I mean, at all levels in Europe, the national ones. So there need to be good laws for this. And also what we find, we will see some points, and maybe there will be some fine tuning needed in some laws or in some actually even some more established. But that has to be done together. That's a normal political process. So there, everybody has to work on this.
Thanks a lot to all of you. The thing which I'm taking away is really, it's all about cooperation. It's all about a transition which is quite innovative, but as well quite fast moving. And I think we'll see a lot of work has been done in this area, but I think we'll have quite a bright future in terms of wholesale CBDC. And thanks a lot to all of you for the keynotes and, of course, of discussion. Thank you.
Thank you.
Thank you. Thank you. Thank you very much. Big applause again for Paul Wessely. And we make 15 minutes break or 20 minutes break and continue at 10:55 for blockchain in banking. Thank you. Perfect. Thank you so much. Back after the break. The next session will be hosted by our close partner, ABC Research. They not only managed to combine 5 universities in one organization, they also work a lot on blockchain innovation, what's happening in Austria in that direction. And for that, I would like to ask Walter Mösenbacher, come on stage, take over and rock the stage of blockchain and banking. Thank you very much. Big applause.
Yeah. Thank you. Thank you, Paul. It's always a pleasure to be here and talk a little bit about blockchain. And to give you a little insight about my person, I worked for over 25 years in the banking industry. I was management director of the Digital Competence Center of a huge, well-known Austrian banking group. And therefore, I know exactly how it feels to deal with modern technology, to bring out digital products here on the market. Currently, as Paul pointed out, I have 3 professional roles. One is Austrian Blockchain Center. We are an applied research center of 5 major Austrian universities. But the second role is I'm director of Fintech Circle London. It's an angel investor network up to £500,000, and you learn a lot when you are in this field and when you can learn from the Brits. And the third role is teaching at the Vienna University of Economics and Business. And here, in the year 2018, we established the FinTech Lab, and it's a cooperation of the Institute for Banking and Finance and Innovation and Entrepreneurship. And our lecture is called Design Your Own Startup. And when I was there the last time, I presented a slide with a central bank digital currency, and immediately one of our young colleagues raised up his hand. He has a Chinese background, and he says, "Oh, Walter, I have this on my wallet. I can show it to you." Yeah? And this is how the world is working today. We are in an international competition. And this brings me to my first slide. There's the saying out there in the world, and I was yesterday in the Chamber of Commerce, as Europeans, we have to be aware that we don't be in the field like the US, the Americans innovate, the Chinese produce, and the Europeans regulate. Innovate, produce, regulate. Yeah? And last year, I was attending the Paris Blockchain Week, and here there was a strong saying from the Minister of Digitalization that he said, we lost the race when it comes to Web 1.0. This was when Google was established on the market, when we see the race of Amazon. We lost, as Europeans, the race when it comes to Web 2.0. This was when we saw Twitter, YouTube, Facebook were attending the market. But we don't want to lose the race again when it comes to Web 3.0. And so there is a clear saying from France that we want to be in the Web 3.0 field, that we want to be in a leading position when it comes to digital asset. Europe should be lead here, the world, when it comes here to the digital asset. And of course, France should be in the leading position in Europe. But it's not only about Europe and France, it's also about the Asian market. And when you take a close look at South Korea, they spent around about 50 billion US dollars in establishing an infrastructure in Web 3.0. It is AI, it's cloud, it's blockchain infrastructure. And companies like Samsung are establishing a payment network here in South Korea. So you see, we are an international race. And of course, if France is saying we want to be one immediately the UK also say we want to be the global leading hub for crypto. And when you keep that in mind, this brings me to my next slide. I choose 3 examples. The first one is from France, is Crédit Social. And the interesting thing is, the strategy of this bank is common with other strategies. They want to be in the cryptocurrency trading field. they want to be in the storage field, they want to be in the digital asset field. They work together with authorities, establish regulation for traders, and they see a future where we only deal with digital stocks, with digital bonds. Also in this direction, they want to move. The interesting thing for me was they do not currently offer cryptocurrency trading. Yeah? This was very interesting for me. And as our colleague pointed out, they are very, very in many fields when it comes to blockchain. They did the first bond on the blockchain. They deal with stablecoins and so on. So you see, traditional banks are entering the market, and they are very, very successful. The second thing is, when it comes to the US, don't only look in the perspective of the B2C market, business to customer market. Walter can buy Bitcoins. It's also in the B2B market. And when we have a closer look to JP Morgan, they have 3 major projects running with the Onyx blockchain. The first is called Link. It's a private sharing information system on the blockchain. The second one is called Coin, GP Coin. And the third one is here the digital infrastructure for tokenization in the asset field market. And you see the race is happening again. Yeah? We in Europe, we are discussing, and JP Morgan has a wonderful solution which is out there on the market. We saw it with PayPal, we saw it with Visa, we see it again. And the wonderful thing is, European-based company like Siemens is now their first customer when it comes to this programmable money. And when you are a global treasurer, you have to deal with over 100 currencies. You are engaged in 180 markets. And it's always the question, where do I need liquidity, have to pay some bills, and so on. And they established a system where you have this programmable money. It means if, then, that. Yeah? You can integrate these programs in the money, and I think this is a major step forward, and they will offer this to several clients. The next one will be FedEx and all the major corporations. And this is, as Europeans, we really should be aware that we don't lose track here. Yeah, and when we see here what is happening in the Austrian market, and I really enjoyed it. Yeah, I think we are in a good position here in Austria. In a traditional bank like the Raiffeisen Landesbank Österreich-Wien was the first one who did the cooperation with Bitpanda. They offer since January here really on the market that you can trade with cryptocurrencies, and it's doing quite successful. It's doing really quite successful. It's very, very innovative. And we had CEO Michael Höllerer here on the stage when we did our blockchain talk at the Vienna University of Economics, and he showed exactly how it is working. With €1 investment, you are here in the market. Yeah, it's attracting young customers. It's attracting several different customers who are interested in this field, and it's working really very, very well. So, third thing, and I think this is also very, very important. You're often confronted with several projects, what you can do in the blockchain market, and one is KYC, the second one is compliance issues, the third one is you can do bond coverage and so on. And she promised me if something happening, it's not my fault, it's always her fault, but it was my fault, yeah. Oops. It's all live. We are a great team. Applause to my colleague. Yeah, we are a great team. And the thing is always when you are a medium, a small, even an Austrian large bank, you couldn't establish an industry standard. So you often wait what is going on in the industry because you cannot be the first mover. You need corporations, you need partners here out there in the market, and this I saw it often is also a weakness here in the European field because cooperation means a lot of discussion, and the Americans are really champions when it comes to scale-up companies. Yeah, they are strong, they are fast, and they can offer a solution. When I was talking with my colleagues in the banking field, what are the cons and what are the pros when it comes to crypto? On the con side, it's very often the risk appetite what you have on your balance sheet. Yeah. Is it allowed from your supervisory board that you are dealing with the crypto? What is the current discussion status with the authorities, with the ECB? If they signal you, we don't want to have cryptos, the motivation to deal with cryptos is not very high in a traditional bank. The next thing is IT. 80% of the spendings in the traditional banks, you have to do this to keep the bank running. To keep the bank running, there's a lot of reporting issues nowadays with all these ESG topics, and there's only a small amount of money where you can do innovative things, where you can do blockchain things, and you have a huge demand management, thousands of different demands, and the IT department together with the board have to decide what are we doing. And then the next thing is focus, mindset, and age. It's really interesting when I talk with colleagues, they often say to me, oh, Walter, it is really interesting to deal with blockchain, to do some cryptos, but our CEO will retire in 1 year. And since then, nothing will happen in our bank. Yeah? And this is a very dangerous mindset. And what we see at the moment very strong in Austria is the race of emerging technologies within the banks. It's AI versus blockchain. And often it's very easy when a CEO can use per his or herself ChatGPT, then he is a fan of ChatGPT. It's not so easy often to describe how a stablecoin is working or a blockchain protocol is working. On the pro side, of course, there's the market need. Even bankers realize Bitcoin is here to stay. Bitcoin is something which will not disappear in the future, and we will see this. It's also an innovative image, and there's one thing which we should always remember. Banks have the trust in the brand, and banks have already existing customers, and the other ones want to have these customers. So you have to innovate constantly to be in the race. And this brings me to my next slide. And it's always a decision, are you at the table or are you at the menu? Yeah, this is the core I think mindset of an innovative company, of an innovative manager. And we have here really cool banks, really tech heroes who show us what you can do even with a small bank. And this brings me to my colleague for the next keynote. And we want to see something about the tokenization in the art field, in the field of very string instruments. And please welcome Marcel on stage from Liechtenstein VB, the Banque. And Marcel, if your headphone is also not working, I have the mic with me. Yeah.
Thank you. So I think it's working. Great pleasure to be here. To myself and to our bank. My name is Marcel Fleisch, working for WeBank for more than 19 years in different fields in mid-office, back office. Actually, since 10 years, it's all about value proposition. What I'm doing, so meaning product management, sales management, credit consulting, and so on and so forth. The bank that I'm working for is the International Wealth Manager. We are based and home in Liechtenstein, but all over the world active and stock listed on the Swiss stock exchange. Yeah, but what has to do this with tokenization? 2.5 years we start with that, based on the blockchain law in Liechtenstein we have. And we have here one of the founder of the blockchain realm. So great pleasure to have you here, Thomas. Thanks for coming here as well. And on this solid regulatory basis, we could be able to set this kind of business model. What you're talking about? We're talking about real-world assets. Everybody's saying now the big market of the future. We're talking about a 15 billion, a trillion market, whatever. We started 2.5 years ago doing this, and we are just going on. And I think let's jump into it. Why we are doing it? What is the solution? And I just want to start with this slide. Here you can definitely see what's about. So our token family at the moment consists of real artworks, diamonds, musical instruments, and of course watches. Sounds great. What for? Why are we doing this? Of course it's about capital preservation, it's about diversification, participation, sponsorship, investment, whatever. But is this all? I think what we learned the last 2.5 years is it has to do with added value, it has to do with cross-selling, and last but not least, and very important, it's all about client experience. And when we talk about client experience, I want to show you this. This is what we are doing as an event for our clients to gain new customers and to have the customers with us. What you see here is in the middle, it's a tone studio. In the middle are the famous artists. We brought in to this tone studio 100 clients. These artists were very well playing, and we record their vinyl, an LP. And all the guests could buy a limited edition, of course, a token, and this token represents the ownership of the luck master, what we will sell in the future probably, and that's an uptick for the client as well. A great combination, what we think has to do with getting the clients passionate, thinking about us, and sharing with us their value and gaining trust. But I think that's a solution. And we want to structure these solutions a little bit. So what we are doing exactly. This was the first use case, what you see here. It's about holistic reporting. So we tokenized an artwork to bring it on our depots, meaning make it bankable, having it in our e-banking, having it in our tax statement, 360 degrees in every system included, even if you have some interfaces, that's what the client want. The first client who did it with us was a trustee who had some trusts, who had trouble to get all the things done. We, as a bank, together with our ecosystem partners, can assure, still doing it very well, that this is running. Next case. I think that's quite obvious. If it's about tokenization of ownership, having part ownership, then this is the most famous or ever seen. We did it sometimes. It's a great thing. What you see on the left side on these pictures is nothing more than a family having some wells. What you see here are some music instruments, some paintings, of course, cash, but in this kind of families, it's often that the cash is very limited, and some other real-world assets. And for descendants, siblings, and when it's about inheritance planning, succession planning, what we're talking about. The issue is, if you do it, what you see on the right top, the traditional way, then if you want to share these things, that means one or two of these partners, of these siblings and descendants, has nothing more than to do get a loan to pay the others out. What does this mean? It's cost intense. It's unfair because the value of the painting is changing. The risk is limited to one person. And it's not sustainable, meaning you cannot change it. Of course you can do it, including lawyers and other trustees, change contracts, so on and so forth. Huge expense, unfair, unflexible. With a token solution, it's easy. We tokenize the wonderful painting, the watches, make it bankable, and having part ownership done, we can just divide this wonderful instruments, and so on into PSIT, get this in their portfolio. They can change it anytime. They can just burn the token as well, whatever they want to do with it. And you, as a trusted advisor, can help here to solve problems, to be the neutral part in this line, to be in a very emotional thing in the middle of the family. And that's what I think is necessary for financial institutions in the futures to be successful. The last case I want to bring and show you today is this one. It's a great one. What we did as well, we worked together with the Musikakademie in Liechtenstein. The Musikakademie in Liechtenstein has wonderful talents, supporting it, bringing it up to the biggest stages of this world. 2 of 10 talents are playing on the biggest and greatest stages on this world. But what they do need? They need classical instruments. Stradivari, Evian, Steinway, Bösendorfer, whatever. They are very expensive. We jumped in and said, okay, you buy this wonderful Steinway. Just some months ago, we presented here in Vienna, one of these wonderful things. And then your talents can play long-term on these wonderful instruments. But we tokenize it. We tokenize it and offer it to our clients. They can have part ownership as a sponsoring or philanthropic thing, but also as an investment. The VIOM here on the left side, you can buy and sell. It's gaining value the last 10 years. Great performance, 50%. So wonderful diversification instrument in a portfolio, whatever. We have 3 winners there because it's tokenized. First of all, we have the investor. The investor has done philanthropic, get some extra benefits, or even have a good investment, diversified. Second, the Music Academy has another method to get financed, to get funded. And last but not least, the wonderful play of these young tenors scene makes everybody emotional. It's great to do that. And bringing these 3 parts together, this is meaning, again, client solutions and high standard. Finally, before I come, how it works, just in a second. What we also did is to explain it to the clients. 2.5 years ago, we brought the first picture to Art Basel, to a side event, where we nothing else did. As you see on the left side, this wonderful Andy Warhol. On the right side, it's digital, and the Samsung screens. And on the backyard, we brought it into a wonderful metaverse. What we did there? We had a lot of guest galleries, artists, critics, all around. The topic of the whole day was, does it make sense? Does Web3 make sense combining it with an Andy Warhol? What was the solution? Easy, yes, because you change the environment. This wonderful metaverse was just done where we, in a very natural and realistic way, and we changed gravity. Meaning the water was flying, not coming from top down, it was a bottom-up thing. All this kind of thing, we brought it in a different environment. The outcome of all critics, of all guys there was, okay, yes, I see, there is an added value. If you do it in a very high quality way, we can even use that. Coming to the last slide, it's all just giving you some impressions that tokenization makes sense. It's not a single thing, but included in an ecosystem, included in a value proposition, you have a lot of advantages, not only for wealthy families. You can do it from the very first beginning. Last but not least, left side, very important to know. The token does not change the nature of the real-world assets. It's just another way to structure it, to handle it, a cheaper one, better one. But of course, you have always, and that's the great thing with the tokenization, 2 different layers of advantages. the left side, you see the token advantages, but also it's very different to explain the client why to tokenize, why to buy this. And it's not that you buy a token. And that's the reason why I never talk to the client and say, it's tokenized. No, we talk about a ruby, we talk about a diamond, we talk about an artwork, because this is the investment he's doing. The token itself, it's just a trusted thing. He believes, she believes in you as a trusted advisor, that you do your things right, that you have a stable environment, that you have the regulatory things done. How can we do this? Finally, you see it on the right side. Using an ecosystem. We cannot assure that the storage is done, the physical object is done in a good way. No, it's not us. We cannot do the valuations. We cannot be the one to say the provenance is good, the documentation is full. Therefore, we included and implemented a trusted and a curated portfolio of different experts around the world who helps us to make this running. Storage, valuation, insurance, and so on and so forth. And you know what? The great thing? It's an additional service. Everybody loves it. Because if you just get something from an inheritance, something like that, you don't know what you have to do. We can give you expertise with our trusted advisor. I think that's it. Thanks for the great time here, and I'm happy now to go to the panel.
Yeah, thank you. I think raise a hand for Marcel. It's really a cool topic. And I think I didn't promise you too much. Bankers are really cool. Bankers are really innovative. And now please welcome on stage our next guests, our panel attendees. First, Istvan Kovac. Thank you, Istvan, for joining us from Raiffeisen Bank International. Then we have Benjamin Schraub from Germany, from Intras. And last but not least, we have Hubertus Hecht from the Austrian ÖKB. So, when we saw this, what Marcel was presenting us, Istvan, you are from a stock-listed major bank here in Austria, Raiffeisen Bank International. You were very innovative. I think since 2018, you attend the field of blockchain. What is going on in the RBI at the moment when it comes to blockchain?
Thank you very much, Walter, and thank you very much for the invitation for today's event. Indeed, I'm very happy to say that RBI is the only Austrian bank that actually established this blockchain hub in 2018. We are 4 FTEs under the strategy division in the bank, reporting directly to the CEO. And in this blockchain hub, we have 4 major goals. So we are the one who are planning and executing the blockchain strategy of the banking group. And connected with this, we are running POCs and experiments in the head office in Vienna, but also in the network banks, as well as, of course, we do very active market research and monitoring the trends that are happening, as well as, last but definitely not least, also attending conferences and events to be on top of what's happening. And also, we are very happy to be in panels. And if I may talk a little bit about current strategy in the bank. So basically, very similarly to as you have already seen this morning, we categorize digital assets into 3 categories. These are tokenized assets, cryptocurrencies, and then digitized money, where we also put stablecoins and CBDCs. And for now, I would say that we are mainly also focusing on tokenization, because we see that there's really substantial market growth in it. And we are working on the tokenization of a real-world asset that we hope to bring to the retail market sometime soon. And when it comes to cryptocurrencies, as Walter already mentioned, we're very happy to see that our shareholders, now already 2 of the Landesbanken are partnering up with Bitpanda to offer cryptocurrencies to Austrian retail clients. Here we also, of course, monitor this asset class very closely. Also, we work together with our network banks in the European markets, mainly those network banks that have actually, let's say, a more developed market, that have genuine interest in cryptocurrencies. And when it comes to the third category, digitized money, of course, is, I think, any bank very closely monitoring anything around the digital euro, what's happening there, what kind of impact it would have on the bank, as well as, I think it was mentioned earlier, we as RBI, part of the DELPHI project. And on the stablecoins, we also run POCs and experiments. Maybe one thing that I can share is that so far we've learned that when it comes to stablecoins, it makes more sense to do it in a banking consortium, as alone a bank or a banking group would maybe not enough for scaling.
Thank you, Istvan. A lot of things are going on in your bank. How many people are working in the blockchain hub?
Thank you very much. So we are four full-time FTEs that are basically making up this blockchain hub. But of course, we work very tightly with many of the experts across the bank on the different topics.
Thank you, Istvan. For the Austrians, it's always interesting what is going on in Germany, and so we are eager to hear something. And we invited today Benjamin. Benjamin, could you give us a brief insight? Where is the German banking industry when it comes to the field of blockchain?
Sure. Thanks. So yeah, when we talk about crypto assets, I think the market is maturing quite well in Germany. We have the regulation on crypto custody for 4 years now in place, and we have 12 crypto custodians. The field is mainly dominated by fintechs, but also some banks are around. So we have Commerzbank, for example, and VBank, who received such a license already. But I think the bigger point here is that probably all the major players now in Germany have announced that they go for a license. So it's DZ Bank, Deutsche Bank, DWP Bank, DK Bank, all of them are going for crypto custody. And now recently we've seen the strategic cooperation, right, of LBBW and Bitpanda. So I think when we talk about crypto assets, then in the course of the next 12 months, I would expect that millions of potential clients will have access to crypto via their classical banking account. And then there's another stream we are also working in, right? It's the tokenization of financial instruments in Germany. And here there's also happening a lot we can discuss, but there's something happening as we have a regulation in place which allows to tokenize traditional securities that we know, like bonds, stocks, and fund units. And here we also see activities, as I said, so we see first tokenized bonds, first tokenized fund units, and also stocks. And this is quite interesting in terms of, from a banking perspective, how to interact then with someone who's maintaining such a registry. It's called Crypto Security Registrar in Germany, a new license to be obtained at BaFin, but it's then really the strategic discussion around, is a CSD required or not, and how's the future looking here?
And Benjamin, you are not a banker, yeah, to say it clear. You are a graduate of the Frankfurt School, and you are in a consultancy company. What are you doing exactly?
Yeah, we are exactly consulting on the 2 topics I just described. So integration of crypto assets into existing business models on the one hand side. Of course, MiCA is a huge topic here, where we help clients really analyze what is their role as a crypto asset service providers, what are the requirements, what's the gap, and then how to implement this. And then also we are helping, especially on the strategic consideration of digital asset use cases, because there are several opportunities, especially in Germany, not only regarding crypto, but also regarding the tokenization of financial instruments. And here this can be interesting, for example, from an issuer perspective, but also financial institutions, all the banks that we would call custodian banks, they could maintain such a registry. And this can be a business case. And here we are helping them to really pave a roadmap.
Thank you, Benjamin. Now we want to switch to Austria. And on my left-hand side, there's Hubertus Hecht. And when we have the preparation call for our panel, I was really astonished. Hubertus told us that he is innovation manager and risk manager in one person. So this is a great thing in Austria. And I'm really eager to hear something about what are you doing in the ÖKB, what is the role of ÖKB, and what is the current view of ÖKB when it comes to blockchain and crypto.
Yeah, thank you. So ÖKB CSD is the Austrian Central Repository. We are the infrastructure for capital market transactions. We are only 35 persons. And why are we doing this important job on the side with such a small team? Because we are working with a lot of partners. We have seen here a network, like we buy our systems from others, like we use T2S, and we have services from all our, other companies, so we focus on our core competences, and this is more or less to be a trustful partner for this infrastructure, being responsible to take care of all the regulatory requirements, and to manage risks, and to be innovative in a way that we deal with the challenges and the forthcoming possibilities of our clients. So there you see already why innovation management and risk management is not so far away, because we have seen in the first panels today that risk and innovation is very much close together, like knowing that settling in central bank money is really an important achievement. And we can say in Austria we are settling, I don't know, 99% of all our capital market transactions that go through us via central bank money. So we can say the Austrian capital market infrastructure has no more or less counterparty risk, and this is on the operational risk side very safe and is regulated very strongly. So I think it's very important that also if banks develop new products, that they have a partner that they can trust in, that the infrastructure is really working. And we have seen it today. One of the key success factors for probably of these technologies will be that you have a trustful partner that at the end ensures that the regulatory and legal and other requirements, operational risk requirements are really taken care of.
And Hubertus, when it comes to blockchain and crypto, Bitcoin, cryptocurrency, what is the current position of ÖKB? Because I know the position of the Vienna Stock Exchange is a little, should we do this, should we not do this? What is your position?
Yeah, so I think on the currency side, this is not our focus. We are capital market infrastructure. But on the digital asset side, we have seen that there is clear possibilities with the new technologies. That's why, and Johannes presented it today very well, have more or less founded or have created this team with banks, public treasury, and OeNB and us, the DELPHI team, where, and I think Johannes showed all the different areas that we have covered there, the business part, the technology side, the risk side, the legal side, and have made a very thorough analysis what are the possibilities in the Austrian market. And we can say, like in comparison to Germany, the Austrian law gives us the opportunity to transfer assets into digital assets, as a representative, not as a full digital asset, but for representative or representation of an asset. So that was not the problem. The legal side said, yeah, you can go ahead. But at the end, we didn't find a business case. And I think, again, going back to innovation management, I have to say the core of innovation management is always you need a product that somebody really wants, where you solve a problem, where you have a need, and at the end, where everybody says, okay, this is an advantage. So I think what the DELPHI team did is saying, okay, what are our requirements to achieve this? One is, for example, to have digital central bank money, because we don't want to get back to a risk situation where we deal with stable coins, for example, where you have a higher risk than currently in the market. So I think that was one of the things that we recognized, and we said we have to wait there. And the second was to say, let's see what the products are developed, and with the legal side, with DAAA, to see how could the Austrian legal system could be improved for this. So we know what we could and should do. We also had discussions with technology partners where we saw, okay, there are solutions in the market. We don't have to develop them by ourselves. So again, we see ourselves as a trusted partner, specialist in dealing this. We don't have to do everything by ourselves. And I think you said it before, there are a lot of also in Austria smaller banks and partners that cannot afford to do all the solutions by themselves. So I think at the end we need a good ecosystem. And I think the Austrian market, because it is so small, has a very good culture working together. And I think the DELPHI team is in this part also a good example.
So, ladies and gentlemen, do you feel the energy of the Chief Innovation Officer of the ÖKB? I think it's really amazing, Hubertus, yeah? And I hope the negotiation with the Chief Risk Officer will be fruitful. So, ladies and gentlemen, this is I think, the word for our next round, when we will discover a little bit the risk in the digital asset field. And I think Marcel did really show us a great example of digital asset, tokenization. But Marcel, there are also, where there is light, there are always shadows. Yeah? And when it comes to risk, what is your current view on the risk side of digital assets?
I mean, we are just now in the market for some years, so actually there's some experience what we made that I'm talking about. Actually, I think we have to divide it through 3 layers. First of all, let's start with regulatory thing. It's very important that you have a stable outlook, that you know what's happening the next 5 to 10 years, that you can work on this and have a basis where you can just grow. You know, that's the first thing. And that we have in Liechtenstein with the TVTG, that's a great thing, and it's easy for us to swap to the MiCA. So I think that's the beginning. This is all when I heard before the risk. You know what the supervisory board is asking you first. What is the long-term perspective? What can you do with that? Are we safe on that side? Then the next thing is on the operational side. I think there is 2 things to mention. Of course, we have the infrastructure. We see a lot of development over the last we have seen a lot of development over the last 5 to 10 years. You need, of course, external support to get this up, to get this running, and even the maintenance thing. So you need sustainable, long-term, great partners where you can just start dealing with them, helping to setting up. And that was, for example, one conclusion of ours that we have our own tokenization engine inside. We have here exactly, we know what we're doing. That's ours. Everything else you can change a lot. Last but not least, not to forget on the operational side, you have to deal with, we are talking about it, something what is connected the whole value chain of the bank. So operational risk by just the human factor. You need the knowledge, you need to update them, the compliance department, so on and so forth. I think that's another thing we have really to take care of. Last but not least, and that's very important, we heard it before, you need clients. Of course, you can have a great ecosystem, great laws, everything great. But the clients, the need, the business cases, what you just prepared, you have to sell it. You have to make it happen, this client experience, whatever. And that is the last thing I want to mention. We saw a lot of things coming up in the market the last 2 to 3 years. A lot of energy, a lot of passion, but it lost already. And for me, as not the crypto guy, not the guy who is just working on CBDCs and something like that. For me, it's just, we need this kind of basis. For me, is crypto, coin business, and CBDCs, etc. It's just the basis. This need to set up, because that's another thing of part of the infrastructure of the financial industry that we can collaborate together. But on top of that, I hope there is more energy that we as financial players gain back the trust in all financial things what the clients needs, but even more than that. I think the next 20 years of a bank is not longer just to grab the money of the clients, try to storage him somewhere very secure. It should be much more, because otherwise we are replaced by other ones, and it's not necessary anymore.
That brings me to my next question to you, because several months ago there was a discussion on Forbes about tokenization. Yeah, and they said we are familiar with this concept since 80 years, but it never took up really. Yeah, because the problem is if you buy a token, how can you sell this token if you don't need this token anymore? Yeah.
Exactly, and that's the reason why we are still alone in the market. We are just, the player who can do it. We have different layers here for installed to be very open to that. As we are just looking forward to have the CDBs installed, and also that we have a closed ecosystem, meaning the token cannot leave our bank. It has to still be with us. So what we have, what kind of solution, if it's about transferring or selling, of course we can only transfer it within the VP Bank unit. On top of that, but when it's about the product, if you want to sell or buy, however, we have no market makers in place. What does this mean? So we have to assure this. How do we do this? First of all, we have the product layer. Okay, you can just set a product where you can buy and sell, open that to the client, define it on the product like you have it on a fact sheet, on a prospect of a product, where you can sell and buy it, or take it and gain it and take it back, give it and take it back. And of course, we are working together with other partners, but this is then the second layer, and the second layer is meaning just burning the token again and bring it then to the reality back where it comes from. There are different opportunities where we have that we can talk with auction houses and so on and so forth. We are closely working with 2-3 partners who want to offer this kind of services to us, that we have a digital auction house, that we have a kind of stock exchange, whatever. But so far, so long, we can only just work within the group.
So, ladies and gentlemen, Marcel is happy if others join the field, yeah, that we really can create a community. And one of the players in the community is, of course, RBI. And the problem often is when you are in a huge banking corporation, how to sell blockchain, yeah? Because there are many negative arguments always there. Oh, there's a lot of energy consumption, who need this kind of stuff. What is your experience, Istvan, in the RBI group? Is there an openness for blockchain? And when it is not, how to deal with all these arguments?
Thank you very much. So, in my opinion, it's definitely a process, that something you have to establish. We know that there are a lot of other things that actually require management attention and have, I think, Walter, you said in the introduction, such as AI. Yeah, it was a big buzz last year, and whoa, there's ChatGPT, I can really use it and feel it on my own skin. So this is one thing that we have to work with. And then I think there are a couple of arguments that we can really bring more management attention when it comes to blockchain. And here, definitely we have to look into the asset under management. That's there, yeah? As of now, we roughly talk about 1.5, 1.6 trillions of dollars that are assets now on the blockchain, but we see that by the end of the decade, it should actually go by 10 times, so roughly 16 trillions of USD. Then it's also definitely important to look at the peers and the competition. Of course, we very much look on the German market side, as there's also an AVPG regulation that actually helps to grow digital assets business. And we see that there are many players on the market that actually invest substantial amount into, let's say, infrastructure, starting with crypto custody, but also building up different business models. And then also this is actually a third big argument that we also see, that there is substantial growth potential in our market, and there are really new business models and businesses that we can bring. And when we can actually work on a business case that actually somehow supports our let's say, strategic bet in the future, then definitely we have open ears of the management, and we can progress with our blockchain plans in RBI.
So you see, this is the daily life of a blockchain manager here in a huge banking corporation. Hubertus, it's always an interesting thing in Austria. It often seems every banking group is developing their own blockchain solution. Yeah, and we are looking at Germany, what they are doing. But there was a time in Austria when banks come together. It was in the 90s with the Stutzer and with the cash dispenser systems. Which opportunities see you in the Austrian market that we work together in the blockchain field? That not every bank is developing their own blockchain solution, or is the race already done?
No, I don't think that the race is done, because we see that we are all in all the areas in a very early stage. So talking in a substance of innovation management, I think we see all the examples that we are at a very early adopter phase. So it's not something we hear from national European bank, from central banks. So this is all very, very much at the beginning, to be really, I think we have to be honest. So I think, no, the race is not gone. So the second thing is, yes, I think Austria is a very good example to work together, because the market, especially in the capital market, is smaller, put it this way, than, for example, Switzerland, Britain, or UK, or Germany, or whatever. So they are much higher market capitalizations and so on. So that was, and you brought it examples also in other areas, that was always the reason why the Austrian banks looked together and said, why don't we develop infrastructure together? So that's why I think this is still, I think, a good opportunity now. But I think, and DELPHI team was exactly this approach, to say, look together, what are the needs from the banks, what are the needs from the Treasury, from the state, what are the needs from National Bank and so on, and look, how could we develop it? And you have seen from Johannes' slides, we had a concept, but currently it's not in a phase where we can say, somebody would say, yes, we invest in this. Yeah, and so I think
I prepared myself well. Yeah, and yesterday I had a close look to your homepage, and all major Austrian banks are your stakeholders. Yes. UniCredit, Raiffeisen, Volksbanken, and so on. What will be happen if you go in the next supervisory board meeting and say, oh, guys, let's do a blockchain solution together? Is there a wave of applause, or
no, I think, no, the point is actually the same. Also in the supervisory board, this topic is always there. The question is, what is the case behind it? Do the banks really want it? And we have to say, also to be honest, the Austrian capital market infrastructure is working very well. I said, for example, we have, I don't know, almost 100% of our transaction, and this is wholesale transaction, clearly settled in central bank money. We have our risk, if we have no counterparty risks, the T2S is saying at every second who is the owner of a security. I think we have a very high standard currently. So I think there are some things that can be improved, like, for example, and it was shown before, that we have assets in different systems on different levels. So that means we need reconciliation and so on. So this is clearly something that could be improved, but also this reconciliation is today automated. So I think we have to say the standard, the regulatory standard, this risk standard is very, very high, and it's in my interest as risk manager to have no risk. So we shouldn't move to something where we get more risk without any benefit, and we cannot accept more risk. So I think to answer your question, I think we need a compact solution concept where we have on the one hand a real benefit as innovation, where we have an financing investment, where we say this is the business case plan, and we have where we can manage this transfer from the current situation to the new situation. And I think this is currently, to be honest, not the case. And I think it shows that good examples, and I think I see what we heard today in the morning was very good, that we see that like the central bank now is really doing one of these cornerstones and saying, how could this digital currency, how could this be settled? How can we ensure a central infrastructure? Because again, we will not develop this infrastructure. We always will look for infrastructure that is there on the technical side and then try to implement it here in Austria or for the bank. So the answer is everybody, if we would come with a requirement and the banks would say, let's do this, I think we will manage to have a decision.
If I may add, maybe, Walter, so when we talk about the tokenization of financial instruments, for us, it's typically two arguments, right? It's opening up of new distribution channels, which are not here yet, to be honest, because we're waiting for the DLT pilot regime. We will have secondary markets. We will have first DLT MTFs and trading and settlement systems, hopefully later this year. Then for the first time, this is a valid argument to open up these distribution channels. And on the other hand side, and here I'm with you, unfortunately so far, tokenization is about realizing efficiency gains, right? But one must conclude then the token as such is not enough to gain efficiency. Yeah? So we see in the German market, for example, where it's possible to tokenize instruments and not go via the CSD, it's not cheaper, it's more expensive because even though a lot of voices complain about the central infrastructure and so on, given the volumes it bundles, it's quite efficient. Yeah? So if you want really to go and say, okay, I want to tokenize and you don't have the distribution channels, you must be cheaper at the end. This comes down then to your competitors at the end, that they offer a cheaper price. And what I believe we will need to see in the next couple of years is more integrated platforms where it's not just about there's a token, we have a blockchain-based registry. You need somehow to close or to get rid of existing IT infrastructure, because this is what's currently really blocking in the German market. There is no solution out there which helps you to get rid of any current IT infrastructure, and this is what really blocking the efficiency topic. Yeah, everything mustn't be on the blockchain. For example, static data is a huge topic. Yeah, doesn't need to go on the blockchain, but it's something where clients want a digital solution where you would need a platform that yes, you can tokenize, but you need also other aspects to cover to get rid of existing IT infrastructure. If we don't make it here, then I'm fully with you. Then from a business case perspective, it will be quite tough. But this could change if we have new distribution channels. Then I believe issuers will potentially say, okay, I'm willing to pay a bit more for the assets under registry and so on, because I can potentially access new clients.
Benjamin, it would be really interesting for us, because you are from a consultancy firm, company. What was your most successful blockchain project? Yeah, and if you can share this with us, we go in the next supervisory board of the ÖKB and we present this idea. Yeah, we already have a business case. So please, Benjamin, because you told me, I think you work with Union Invest and all these big German
I think projects
companies
typically work well if there are working groups within an institution, and this working group consists of participants of the whole value chain inside this company, right? So be it regulatory, be it IT, be it business, and so on. Those projects work well because you then have already internally, let's say, stakeholders for this topic to get the project really implemented at the end. Projects which are a bit more difficult, to be honest, are if they are purely triggered by an innovation team inside a huge institution. Here we see a bit of, it lacks a bit of power then really to get the use case really through the management then at the end. So this is really a difference we are observing. Way more reluctance if a case comes from an innovation team only, because I believe they are suffering a bit of this day you have to do blockchain, another day you have to do AI. So there's not really this clear commitment as where you have a working group that deals with blockchain for 2 years, then they know what they are doing, right? This is their topic, they want to get it done. So this is an observation we made.
And Benjamin, could you share the volumina of the projects a little bit with us? Are we talking about millions of euros,
Sure.
billions of euros, or
Billions.
only several 100,000?
No.
No, what you are earning.
Yeah, okay, I get it. From a budget perspective, it's still challenging to be fair. Yeah, so the willingness to invest really, I don't really see. So it's getting better, definitely. It's improving based on the maturity of the market, but it is still not the case that blockchain is a case that is heavily invested on from my perspective. We've seen, for example, last year that a lot of potential budgets were cut for blockchain and then went into AI.
But could you share, is it 5-digit number, 6-digit numbers in the volumina, or?
We can help with quite low amounts, I'd say, but it depends on the use case, right? But for us, or our perspective on the market is a bit like, it doesn't need a huge consultancy and 10 consultants to get a use case running, right? It needs maybe 2 guys who know what they are doing to get a use case running. So the clear message is it wouldn't need that much of budget if you contract people who know what they are doing.
Exactly, I want to jump in that with, because it was exactly our experience, and I will really highlight what you said. Never give it to an innovation team, just never make a hub, just bring it really from the organization.
I think they are really angry with you, yeah, in the first row.
Bring it really from the internal of the bank, because as you said, you have to find some gains, you know, to fill some gaps, something like that. So meaning it could be on the infrastructure side, IT-based. It can be on the processing side, it's operations and something like that, even on the risk sides. And finally, hopefully, if there is not creativity in the bank, in the financial institution, that it's coming from the front line, meaning definitely some use cases, business case, where it can say, hey, we can make business there, we can earn money, this is an added value. And if you're just having this approach in place, that you have a group installed who is consistent, or is consistent in that they have all the value chain represented in that thing, then it's just not a one thing. Just don't start a project, that doesn't work. It must be a consistent group, a working group, who are just making out of that some use cases where they regularly present to the periodically present to the group executive management, wherever, and then just find out where you place yourself. Don't wait for the standards. I think that's the key message you can place here.
When I was in the bank, I learned a really cool quote, and it was said by the former CEO Walter Rottensteiner, and he said, you need always 2 kinds of people. People who are doing something and people who allow that something is done. Yeah, and when you have the impact of the top management, then something can happening, and we are now attending our 3rd round, where we do a little kind of future journey. What will be the situation in 5 years from now on? And I will start with Istvan, because he's a tough, cool guy. And in our journey, let's see, Istvan, you are the new CEO in 5 years. What are you doing? What will you do that your bank is on the forefront when it comes to blockchain?
Thank you.
What are your ideas? Yeah.
So I think it's a prerequisite to make basically blockchain as a technology, let's say, in my opinion, in order to scale it up, it should be something easy and convenient for the average people to use. So I think it's fine, let's say, that banks would own this technology and make it cheap, accessible to average people, so they can use it. I think this is a prerequisite for scaling. And then once this is there, I would see that there would be, let's say, 3 pillars in my bank, if I was the CEO there, where I would like to implement blockchain. And one thing would be, definitely, I would really invest heavily in the custody part of this, to kind of make a bank a safe haven for any kind of assets that we have. Just think about, let's say, 100 years ago when people kept their gold and any kind of valuables, books, whatsoever, with the bank, because that was a safe place. I think that in the future, banks could be still a safe haven for also any kind of digital assets. This is one thing. Another thing, I would definitely offer a wide range of digital assets, be it cryptocurrencies, tokenized real-world assets, securities, on so on and so forth, to basically both clientele on the retail side, but also on the corporate side. That would be the second pillar. And if it comes to the third pillar, I think that there should be also some, let's say, back office and operational aspects of blockchain. I would love to see, of course, this was mentioned earlier, once there is an ecosystem to really reap the benefits of blockchain and DLT in the back office, in the operation side, thinking about reconciliation, settlement, transaction. I think a lot was said about this in the first round, so that would be the third pillar in my bank.
Yeah, and the wonderful thing is the whole session is recorded, yeah, and we can look at this session in 5 years from now if we are really doing this. Benjamin, I always love these young startups, the energy, the passion, what you have. When we do the future journey with you 5 years from now on, are you a unicorn then in the German market, or what will we see from you?
Will be tough to be unicorn as a consulting firm, but we're working on it, definitely. When it comes to blockchain, I think 5 years from now could be a bit too long to really make strategic decisions, because I would expect that we will get hopefully our secondary markets running this year. They will then mature over the course of next years. We will somehow solve the cash lag we plenty discussed today in potentially, hopefully 3 years from now, maybe 4. And then it's all out there. Then you have tokenized instruments, you have the cash lag. So then I would say 5 years is too late from now to make decisions. I think by then you need to decide how to set up key infrastructure, and with key infrastructure I mean wallet infrastructure, and maintaining a registry that is blockchain based, because if you don't have this as a player with a certain threshold of assets under custody or management, you will simply lose access to your client base. Yeah? And I believe this will happen before the next 5 years.
Thank you, Benjamin. Hubertus, we learned 5 years is too long. Yeah, then let's jump the next 3 years. The Austrian banking blockchain ecosystem. Which developments do you see, and what could be the role of the ÖKB in this system?
I think first I want to make a remark. We are always talking only now about blockchain. I think you have shown by yourself that we have different technology developments. We have also on cloud, we have AI and so on. I think we have to see that there are also other developments, and I think all of them should add benefits and solve problems for us. So I think it's maybe not so good to only look at blockchain in a separate way.
Let's talk a little bit about quantum computing. Yeah.
No, but the second thing is, and I think I can be very close with my two colleagues on my left side. So Ishwan said, yes, you expect some improvements in settlement in the way of how the infrastructure and your whole custody infrastructure is handled. And you said the same, that you said all the banks have very old or partly old systems with a lot of costs, and it's to replace them would be a big benefit, but it's not so easy to replace it. So I think that was exactly what we discussed at DELPHI. We said it's possible today already to have one infrastructure that is based on blockchain, but also other technologies. You said like static data could be on other technologies and so on, and it could be in a way that it could be managed by like a CSD and a central register. You said also, and this could be used by all banks, and it would always have a distributed ledger, and all participants are working with the same positions more or less. That's the idea. Then you wouldn't have 5 layers of positions, but only one. And I think this is something that I see as a clear strategic possibility if this is demanded and if the banks say, yes, let's do it together. If the banks say we want to do it all by ourselves, we cannot force them. You said that the CSDs are not so bad in their cost structure, and I think it's true because we manage with 35 people the whole Austrian market, so it shows that it's possible to be efficient there. So I think we can make this offer, and that would, as a CEO, I would always do this offer to the market. And I think also the DELPHI team shows that there's an interest. But I think at the end, I would say it's a long way, in a way of maybe not of timing, but it's a very complex project and development. And I think should not be underestimated, the complexity. So I think also now from the risk point of view of a project risk, we should be aware that this change needs time and needs a very long lasting strategy. We have to be marathon runners and not 100-meter runners. And I think we need in the whole market management attention that is looking in a longer view and not only for the next year. If this is the case, I think we can come to business cases that are interesting, but they're interesting probably in a timeline of 5 to 10 years and not in 1 to 3 years.
With Hubertus is always wonderful. I always hear the innovation manager and the risk manager beside me. Marcel, in the next 5 years, how many Stradivarius will you tokenize and how many Vion violins? What are your exceptions for this topic?
Yeah, I just want to do a remark as well, because we see now this AI hype. I think we have this AI hype. We had these hypes we had all the time. And I'm just still struggling with my thought and said, 10 years ago, or less than 10 years, we were all there talking about big data, And if you ask now chief data officers where we are we ready? And now, they are not. And now, on top, we use this not structured data and want to put it in an algorithm and use this kind of data. So I don't see this hype. I think we have just a conference in London, so I think the portfolio manager will not be replaced. I think we will have to comply with a lot of data compliance issues and so on and so forth. So it's just in the beginning. It's a hype. So blockchain, I think, goes through this process. We had a depression. Now we are coming back. I think we get now really a lot of solutions where we can work with. So, but now from 5 years, what we are talking about. So 5 years from now on. So I hope, first of all, that we have standards in place. We have a clear infrastructure. I am there sitting how I use CBDCs, how I use stablecoins, how or not use stablecoins, how I use the financial infrastructure to gain new products, make out that solutions, and finally have great client experience. I think that's where we're looking and facing on. I think hopefully we don't discuss in 5 years from now on, not again about how can we implement CBDCs, how we can just use this kind of infrastructure, what are the standards, they have to be placed. And it's definitely a thing, what we heard here on this panel, that we have to work together. We have to define standards, we have to look forward and finally get some solution. And in the end, I want to really highlight what you said, we need to see business cases, and therefore we need all the guys, what you said, the guys who decide and the guys who do and work and act. But I think there's a long work and a long way in front of us, but 5 years, I think that's realistic, that when we talk here again about something about blockchain, then it's about having it on top of this layer, what are the solutions, what is the client experience, and what is coming next.
So I have the wonderful position that only 5 minutes between this panel and your lunch is, yeah? And we can close this panel immediately, but there is the wonderful opportunity to ask our experts, and we have still room for 2 or 3 questions. Use the chance to ask these international banking tech heroes on my side. Is there a question out there? Yep, thank you.
No Bitcoin, yeah. This is clearly a distributed ledger, but where's the distribution in a bank? So for example, RBI, how many nodes do you have? Or it's only basically the name for, or you use the name for a technology where you can put tokens on?
I think answering your question, I would also refer to the slide from Marcel. When it comes to blockchain, I think it's extremely important to have partnerships, to work with, let's say, technology providers, and also rely on their infrastructure. I don't see the need, at least on the short and medium term, to have our own nodes, to have our own chain. I think and we see it also on the German market, there are a lot of cooperation with really licensed and specialized partner on the field. So I think it also works well if we have this infrastructure in a cooperation modus.
Okay, thank you. Is there another question? Horst? No question. So then I think it was really a fascinating panel. We learned a lot from the traditional Raiffeisen Sumsi-Sparbuch to the Bitcoin Corporation. It's amazing, it's wonderful. We saw how you can tokenize worthful assets. I always appreciate this. If we as Austrians can learn so much, we have a future business role of the ÖKB to really be a player here in the ecosystem. And I always appreciate it when we have the feeling in Austria that we are not behind the Germans, that we are on the way, we are on the track, and so with that said, huge applause for our panel.
Thank you very much. Also, thank you very much, Walter Mösenbacher, for hosting this panel. So now I want to close the first part of the day with the words which are still in my ears, yes, we can. I guess the buffet is open. Thank you again for the OeNB, and we continue at 1:30 p.m. Thank you very much. Good. So I hope everybody is ready after the lunch to go deeper into the topic. We heard about CBDC, we were talking about blockchain in banking, and now the next hot topic is stablecoins. And for this, I would like to ask on stage Oliver Stauber. Oliver Stauber is not only well known in Europe and in Austria as being a top lawyer in blockchain topics, but also working at Glassnode, Bitpanda, and a lot of other topics. Big applause for Oliver Stauber.
So. Bin ich schon zu hören? Ah, wunderbar. Danke vielmals, lieber Paul, unser Präsident. Thank you very much for the short and nice intro. It's my pleasure to welcome you as well from my point of view. And after the nice lunch, I hope you won't fall asleep, but I'm very honored to have this nice panel with the next hot topic, as Paul already said, which is stablecoins. I'm sure it's that much excited that you will not fall asleep. And I have great panelists here with me with regards to that topic. They are very, very good experts on that field. And please help me to introduce them and give them a warm applause. It's Ben Levitt from Blue Chip. And Alex Höppner von AllUnity. Please take a seat, guys. So Ben is the CEO of Blue Chip, as I already told you. It's the world's first rating agency for stablecoins. So this is going to be very interesting. And before he was a professional poker player, and then he applied his risk, how can I say, skills and management skills to crypto and digital currencies. Before Blue Chip, he founded a successful e-commerce business and led operation, finance, and brand building functions within the organization. So very welcome again, Ben Levitt.
Thank you.
And on my left side, Alex Höppner. He's the designated CEO of AllUnity, which is a joint venture of DWS Asset Management Germany, Galaxy, and Flow Traders. And he wants to issue the first regulated euro stablecoin in the European Union, the major one at least. Alex joined from 100x Group, the holding structure for the crypto exchange BitMEX, which you all are familiar with for sure as a CEO. Before that, he was with Börse Stuttgart and as well with Euwax and Deutsche Börse AG. So he's a very expert in exchanges, I would say. So, having said that, I'd like to give you a short intro into the whole topic of stablecoins, which gives you a little picture of how the world in stablecoins looks like at the very moment. So stablecoins play a very major role in moving liquidity between exchanges, for example. It's the asset that's mostly used if you want to exchange your assets from one exchange to another. Then, maybe also interesting figure, 1.5 million transactions are sent per day globally only on stablecoins, which the majority of it, so more than 90% of it, it's small transactions. So it's below 10K, which shows you that a lot of people doing small transactions on DLT via stablecoins. The next interesting figure maybe is that around $70 billion per day are transferred globally on stablecoins, whereas 74% of that is below 100K. So what I wanted to tell you in my introduction is stablecoins already play a major role in especially the DLT economy for sure, but also in the real economy, in moving assets, in storing assets as well. Even that is interesting. What I learned yesterday, that even more people are holding stable coins as a means of value, not only Bitcoin and ETH or other stuff, but also stable coins. And now I'd like to give the word to Ben that gives you a little bit deeper insight into stablecoins, different means of stablecoins, and how the world is in stablecoins, and for sure, why we need a rating agency for stablecoins. Ben.
Sure. Thanks, Oliver. So I'd like to give a quick intro on stablecoins in general. So stablecoins are a type of cryptocurrency that has its value pegged to any kind of asset. It could be another fiat-backed, like a fiat currency or a commodity or any financial instrument, stocks. And basically, there are different types of stablecoins. And there are fiat-backed stablecoins, which I mentioned. They are issued by a central issuer and are mostly backed most of the time backed by a 1-to-1 ratio. So if there are 1 million tokens on the blockchain, there would be 1 million euros on a bank if it's a euro-backed stablecoin, for example. And that value is dependent on the backing, so on that euro specifically, and it's also blockchain-based. Then we have commodity-backed stablecoins. They are also central most of the time and are also backed by a 1-to-1 ratio. The difference is that they would be backed by gold or stocks or real estate, so they're dependent on that commodity. And then there are crypto-backed stablecoins as well, and they are decentralized. So there is no central issuer behind that stablecoin. And since it's backed by Ethereum or Bitcoin, for example, as that is a very volatile asset, or can be in specific market conditions, the collateralization ratio is 2-to-1 most of the time at least. We at Blue Chip want it to be at least 220% to get a safe rating. And that reason, of course, is that if the price of Ethereum drops by 50% and it's backed by Ethereum, then only a 1-to-1 ratio wouldn't be enough to cover that token sufficiently. So it's dependent on the value of Ethereum if it's backed by it. And then we have algorithmic-backed stablecoins. They're also decentralized. They're basically deployed on a protocol. They have a 1-to-1 ratio as well. And they have no collateral, so there wouldn't be Ethereum, gold, or any fiat currency behind it. And it would basically be dependent and backed by an algorithm who makes sure that it's a stable asset and that stable coin stays safe. But so far, the experiences with algorithmic stablecoins haven't been the greatest. In 2022, there was an algorithmically backed stablecoin that had a combined market cap of $60 billion. It also had a governance token and the stablecoin that made up that market cap. And in the span of a few days, it all basically evaporated because market conditions changed and we had a bank run. And it was also backed by its own governance token, which can't really ever work. And now you might ask yourself, why do we need all these types of stablecoins? Why isn't there just one stablecoin? Why isn't there just one CBDC, for example? And I want to talk about this stablecoin trilemma for a second. So there are three main components when it comes to stablecoins. There is stability. It's important that the stablecoin holds its peg and maintains its stability. Then there's decentralization, and then there's capital efficiency. And so far, it wasn't possible to basically build a stablecoin that achieves all these three characteristics. We, have, for example, have USDT and USDC as the two largest stablecoins in the space. They are so far quite stable. Of course, there have been some ups and downs. For example, USDC had 7% of their backing in the Silicon Valley Bank, which had a bank run. So it was trading at 93 cents for a few weeks, but it returned to the peg as the bank was sort of sufficiently basically saved. And so they are quite stable, and they're also okay when it comes to capital efficiency. They're back to 1 by 1. So that would be two things that they would basically make possible. But when it comes to decentralization, they're completely centralized. So they're still dependent on that one entity or that company that issues that token. And then there's also, obviously, if we look at stability and decentralization, then we have decentralized stablecoins like DAI, for example. They are completely decentralized and have so far been able to hold that peg, but they're not really capital efficient because they require, as mentioned, a 2-to-1 or more backing ratio, because that backing could be very volatile. And then there are stablecoins that, they are decentralized and they're very capital efficient, like an algorithmically backed stablecoin that potentially had no backing, so it would be very cheap to run that stablecoin, and it's also decentralized. But so far, as mentioned, the stability, which is the most important aspect, hasn't been met with that. So that's sort of an issue that we currently face in the stablecoin space. But this is sort of a quick intro on stablecoins, and yeah.
Thank you for that. So I may already hand over to Alex now, which tries to solve this complexity with the euro-denominated stablecoin from your AllUnity, and maybe you give us a short introduction to your project and where you're heading to.
Yes, absolutely. Thank you, firstly, for having me here. So let me start a little bit differently. When you think about stablecoins and you just let pass the first panels that we had here and the discussions we had here, imagine a world where you have to sign up with one bank in Austria to get euro. It would never work. Think about a venue that there's only one venue in Austria that you can use, or one project infrastructure that you can use. Otherwise, you can't pay anything. Won't work. Imagine a world where everybody has to be client of one single entity to get money. Won't work. So in that respect, what we're doing is pretty simple. We will not define the blockchain or the tokenization or the use case of the future. That's not our role. Our role is to provide a normative transaction means, and that needs to be regulated and that needs to be stable. And with the MiCA regime, which comes into place in July this year, we have for the first time, relating on some of the problems we had in panels before, for the first time we have a foundation that allows us to issue an e-money token under MiCA fully regulated in the European Union. And we will issue this on all relevant public and permissionless level 1 and level 2 chains. Because we will not be the ones to define which is the use case of the future and which chain will win. It's not going to work. And on the other side, when you look at the collateralization, and we had this, I mean, Terra Luna, the bust of the algorithmic one, yeah? I mean, if you had a chance to read the paper, the risk was in the paper. Yeah, so when everybody was complaining, oh, we couldn't foresee that, you just have to read that stuff, okay? It's always the point. When the people complain about losing money, first you have to read the stuff. But when you look at collateralization, then evaluate a basket. If you're a big company, you can probably do this, yeah? Share value, real estate value, gold value. But as a private person, it's very difficult. How's the collateralization? How's the backing working? Yeah? Yes, regulation is good, stamp is on it, awesome, but I want to keep it simple. And this is what we do. So firstly, to the front, to the customer, on all relevant layer 1s and layer 2s, public and permissionless, you don't have to be a client of us, you get KYC'd, AML'd, you can get the coin, be done with it. Collateralization, 100% cash. You give me fiat, I put it over the reserve bank on a central bank account, end of it. Your fiat lies there. That's it. You want to have it back? Here, take it. Very simple. Because then you can evaluate the risk. The risk is, my fiat lies with the central bank. Everybody can grab that. The moment I start investing that money into something, gets really fuzzy. What if the market crashes there? What if it's not the right infrastructure? What if something happens here, if something happens here? We are strongly convinced that this stablecoin can work out if the central risk is on the same level of the Eurozone breaks apart. Because in that risk, we live anyway. Yeah, there's no change to the risk that we're living in it anyway. So our approach is really to apply for an e-money license for a MiCA-compliant Euro stablecoin, 100% cash collateralized on reserve banks in Europe.
Great, because as you may all know, there are small Euro stablecoin projects in Europe currently existing, but you aim for something completely different. So being the Theta in Europe, but regulated and transparent. And even this is something I want to hand over to Ben already again. So what are you doing then? Why do we need an agency that then is going to rate this kind of stablecoins?
Exactly. So there are so many stablecoins out there. And Blue Chip actually was born out of the idea that basically we saw what happened in 2022. The Blue Chip team saw it coming, that the Terra Luna stablecoin will crash. But obviously, most people who were just using stablecoins, they're not aware of the risks and are not looking into this as much. So we developed the SMITCH rating framework, which evaluates all stablecoins based on a variety of factors. S is stability and M is management, and it's basically an acronym that evaluates and really tries to provide value to users that are just not aware of these risks. And for example, Terra Luna was marketed very, very well in Argentina and in Venezuela. That's where there was a 200% inflation rate, and people just needed some way to basically exit their fiat system. It's basically everyday business there, how to exit your currency. And in a world like this, it's essential to have an alternative currency. And obviously, using the dollar or the euro would be a huge gift for them. But it's very difficult and basically impossible to create a bank account when you're in one of these countries. You can't create a bank account in Vienna when you're in Venezuela. And or even exiting to the dollar, the government makes it really difficult for people to use the dollar. So just by having an internet access, all of these people are able to buy any stablecoin and access these currencies as well. But of course, they don't even have the time to spend on learning about all these stablecoins. And so they went with Luna because it was marketed so well. But all in all, there are still so many stablecoins that just, we try to evaluate. And we currently have over 20 stablecoins rated, the biggest ones, including USDT and USDC. And it's a very, very interesting topic because the entire stablecoin market cap is $160 billion. But 90% of that is USDT and USDC, so Tether and Circle. If we look at soft drinks in the US, for example, Coca-Cola and Pepsi have a combined market dominance of 72%, and these two stablecoins have a combined market share of 90%, and that's just a bad situation to be in. We need diversity in a sense and safety, and for Tether, which has 110 billion of that 160 billion market cap, we're currently not aware if there are no financial audits publicly available. We don't know the names of the custodians where these reserve assets are currently sitting. So it also has a D rating at Blue Chip. We give grades from F to A+. And this is why we need it.
To give more security to the market, but now, as you may have already learned this morning, like I did, that there are already really interesting and great projects running around the national banks, even also the BIS and World Bank and all these huge players in the market looking for a solution for wholesale CBDCs, for example, or even already in China, where you have the yuan as a CBDC, which is very much distributed also not only in China nowadays, but all over Africa, South America, stuff like this. So what do you think, where and why, and the question first of all goes to Alex for sure, why do we need a stablecoin at all at the end of the day?
I think there's various means to that one. The first thing is when we look at internally, Europe, but I come to the geopolitical thing in a second, but let's say internally with the development of the regulatory framework and let's not forget, and with all the complaints running around, we have with the MiCA regime the last building block of an extremely comprehensive legal framework in Europe. And it's the largest, let's say, economic zone that has such a framework for tokenization of everything. And we need the stablecoin as a transaction means for this tokenization capabilities. And yes, I know about these discussions about here's a wholesale CBDC, there's a digital euro, but it's for retail and it's only this size, and here's that size and that size and that size. Guys, it's not going to work. Because for you as a user, forget about the wholesale CBDC as an interbanking transaction thing, that's a different animal. But if I'm going to a gas station and I look at my account and there's €1,000, and then I get rejected because these €1,000 I can only use there and only this and this and this will never be accepted. Never. I mean, we have to come from the customer's perspective. And the customer sees in his bank account. The customer doesn't even care whether it's securitized or tokenized. At the end, they don't care. They just want to use it. And ultimately, they will use what is more efficient. Yeah. And so they see €1,000, they want to buy stuff. Yeah. And that's it. And currently, the discussions are good because they are, I mean, everything is fresh and new. And when everybody's complaining, oh, guys, there's no business case yet. Guys, this is just what, 8 years old? Yeah, most of the industries that are 8 years old don't have perfect business cases, yeah, because we're still in an early phase. But we need to come to something which is used widely because otherwise it's not accepted. Now, coming to the geopolitical thing, I mean, everybody was, sorry to say, and I hope I'm not stepping on some toes, everybody was laughing about Russia when they've tried to force buying of the energy with digital ruble, yeah? Nobody will laugh about China if they force their counterparties to use the digital renminbi or yuan, yeah, because you will have to adopt it. The US are very aggressively marketing the digital US dollar, yeah? And they're doing this all over Europe, where they're not Africa, where they try to convince the central banks to adopt the digital US dollar. And China's trying to force everybody to adopt the digital yuan. And what's the answer of Europe? We're discussing stuff. Guys, it's very simple. We won't have 5 years from a geopolitical thing. Yeah, we need the digital euro to position ourselves in the currency battle that's happening outside of Europe. And if we don't have one, we have to swing in one side. And the unfortunate thing with the digital stablecoin is you need to have a digital identity. So if we go on the Chinese digital yuan, then we are also on the Chinese digital identity. And then we are also using all the infrastructure there. And whether this is then as free as the one that we might come up with is a different question. And therefore, we need it internally to really gain access to the possibilities. And again, not everything needs to be tokenized, no doubt about it. But again, the customer doesn't care. They want to have the most efficient way. But outside of Europe, we needed to position ourselves and to keep it as one of the second largest or third largest currencies in the world. And given that we have this regulatory framework, it's the most advanced. We could have a different position. And euro stablecoins and the global stablecoin markets today are below 1% market share. Yeah. On the fiat side, euro usually ranges, what, 20 to 30%. So that's the potential gain that we can have. But we have to have a unified offering for that.
Great. How do you see that? And on the other side, how do you handle that? Is there also a rating of CBDCs then? No, I guess not. But how do you jump in with blue chip there?
Yeah, so in general, I mean, Smidge is focused on stable coins. I would say, I mean, stable coins and CBDCs are similar in the sense that you can use both things to pay for something. But other than that, they're very different. Obviously, stablecoins are issued by companies or deployed on protocols. And CBDCs are issued by a central bank or by a government. And there are quite a bit difference when it comes to privacy concerns. So obviously, a CBDC runs on a permissioned blockchain. That is basically a blockchain that has some specific access for a group. Most of the time, it would be a central bank or a designated company for that. And that entity is able to view transaction history and validate blocks and basically have the entire control. And that just makes it also much more risky from an information and hacking security standpoint. Whereas stablecoins are most of the time deployed on the Ethereum blockchain or on blockchains that are completely decentralized. So that's a huge consideration. And currently, we only focus on stablecoins as we believe that this is where the journey basically will go. And yeah.
As you have as a rating agency your own framework, yeah, how does regulatory aspects jump in there? So how do you rate this, for example? As Alex already said, 30th of June, MiCA is going to be applicable for stablecoin issuers at the end of the day. So how do you see the market developing also from a rating perspective if then USDT Circle, whatever, is applying for at least for such a license, or if they fail to get this license, how would that affect, for example, their rating on blue chip?
Yeah. So in general, MiCA is a very important and mature sort of advancement of the industry and very important for the space. When it comes to regulation and the SMID framework and the safety of stablecoins or assets in general, we have our own framework, right? We're not using the MiCA framework to evaluate safety, we're using the SMID framework. And an example I like to look at is if we're, for example, rating the safety of Bitcoin, and Bitcoin gets banned in China in 2 weeks, and Bitcoin has an A rating at blue chip. That rating would not change based on that Bitcoin ban because the characteristics of the SMID framework would still apply. So regulation is very important, and it's something that obviously can change our framework and that we will sort of adjust over time, as also the entire stablecoin space will adjust over time. But when it comes to safety specifically, the SMID framework has its own parameters that will not be affected immediately, at least.
Mm-hmm. And how important, guys, that you know that as well, maybe, it is to have a rating agency is that blue chip was the very first one, but then suddenly also S&P, for example, jumped in and said, okay, this market is that large and is that important that we also have our own rating now for stablecoins with their own framework models.
Yeah, 6 months after blue chip, the S&P rating launched as well. There's one more slide I want to quickly show if that's possible. Can we?
Can we?
Yes, perfect. Great. So obviously we're talking about stablecoins here and how important they are. And I just want to go through just a few numbers. So these are basically the transfer volumes of the financial systems that we know, and also some crypto assets, stablecoins and Bitcoin. And I just want to show that since 2016, when stablecoins first entered the market, now 7 years, 8 years later, they almost hit the transfer volume of that of Visa, even more than Bitcoin, more than all remittance payment in the world, more than PayPal. MasterCard isn't even on there. MasterCard had a $2.2 trillion transfer volume in 2022. Stablecoins hit a record high of $7.4 trillion, and only Visa was above with $12 trillion. But what's interesting to note is that in the past 3 months, the transaction volume of all stablecoins combined is already higher than the average transaction volume of Visa in these respective 3 months last year. So it's actually quite possible that for the first time ever in 2024, stablecoins would overtake Visa's transaction volume. So just to show how big that entire network is just incredible. And also, all of that just with a market cap of $160 billion. And obviously there are more stablecoins coming into the market pretty much on a weekly, monthly basis. And that is a very important sign that these are actually getting used all over the world for different kind of reasons. And yes, that's...
Thanks for that as well. So Alex, maybe from your point of view, AllUnity and the euro, will enter this market, you know, very successfully. How do you see the competition from one point of view? How do you see Circle Data applying for licenses as well in Europe? And what's your idea to get the most out of it in the next coming months and years?
Yeah, I think Tether announced that they will bail out of the European market. I'm just quoting what is at least what is in the media. So I doubt that they will apply for a license. I mean, they're earning enough money. The question is whether they need to do it. Yeah. However, for every user, I think it poses a risk because it is unregulated. Yeah, and they have, as you said, 110 billion or 100 billion out of the 160 billion. So you have a concentrated risk. Yeah, and for an unregulated company, where maybe the transparency on the collateral is not as obvious. Yeah, if you're running an institutional player, that is a risk. Yeah. Now, Circle is the largest, I'd say, the largest euro stablecoin so far. It's the second largest stablecoin issuer so far. So it makes perfect sense to go into the European market. Yeah, especially as Tether is not moving. Yeah, so definitely Circle will move in that direction. Outside of that, yes, there are a myriad of projects out there. Yeah, and probably some banks are thinking about this, and some initiatives are here, and some initiatives are there. They're whitelisted initiatives, they're private chain initiatives, but as said before, this won't work. Yeah, and the good thing about the stability of a regulatory framework is a little bit also the negative side. It's quite costly to achieve. Yeah. So in that respect, also, I doubt that every small startup that's currently working on this, because it's the hot topic in itself, will manage to get the license, because you need to have a lot of funding, yeah, to make this happen. And you need to have sustained funding. Otherwise, the regulator will probably not grant you a license because they want to have sustainable business there. And the next piece is stablecoins are trust per se. In a sense. So you need the regulatory framework, you need the transparency, you need the stability, you need the framework and the collateral management. And the question is, and as good and as fancy as an infrastructure might be that the three of us think about, I don't know whether you would give us 100 billion if the three of us are setting up a stablecoin. You want maybe some more security before you do this on a larger scale. It might work if you just trade a bit Bitcoin or some perpetual swaps or so, and you want to have some stablecoin, no problem, you could do this here. But if you're running a prop trading shop and you're responsible for 500 million, you cannot give it to three guys in the garage, even if they're funded. It's not going to work, guys. So depending on which direction you want to take with a stablecoin, the market will ultimately be in, as today, one or two hands. Maybe make it three, but it's not five. It will not be more. Splitting liquidity is always the killer. So there might be five at the beginning, but it will quickly go down, because ultimately you will look at the structure, the setup, and whether you can trust that beyond the regulation, because the regulation puts everybody on the same page. Yeah, and then ultimately you will end up with maybe two players.
That then have maybe sufficient rating with blue chip. Having said that, you told me none of them currently has an A+ rating. How comes? What's missing?
Well,
maybe also for Alex. To know.
Hey, please come on.
Yeah, I mean, there are stablecoins that have an A rating, which is already excellent. An A+ really needs the highest score on all parameters, which is maybe even impossible. We don't know, but having an A is already a very good goal to achieve, in my opinion. So,
what do you think? We not only talk about retail market, but the whole international trade finance, for example, is waiting for such stable coins, I would say. The industry is asking for it, as we know, especially the German ones, as far as I know. Yeah. How do you approach them on the one hand side, and on the other side, for example, do you believe that if blue chip would give you an A+ rating, your chances will raise that they will adopt all Unity or their choose stablecoin?
So absolutely. Start with the first things, and maybe there's a development or an iteration of target markets. Yeah? There is a demand for stable coins already in the crypto trading market. 80% of the global crypto trading market is perpetual swaps, so BTC, USD, perps. About 20 to 25% is coming actually from the Eurozone, but it's vastly underrepresented when you look at the ratio. So there's a huge demand for Euro stablecoin in the classical crypto derivatives and options trading space. Regulatory framework for this is there, we just have to do it. Second piece is the whole, let's say, close to banking, payment, collateral management, remittance payments. The regulatory framework is also there. There's not so many use cases already live. Stripe is doing a lot on remittance payments, as you see some stuff, but it mainly depends on now, especially classical corporates having international business and wanting to use a stablecoin for efficiency basis and using their banks to support them on that one. We have a lot of demands, and when we talked to potential reserve banks about holding the collateral for us, the fiat collateral, we directly have a discussion about, hey, what can we do on the collateral side? What can we do on the payment side? What can we do on the remittance payment side? So there, the discussion directly starts from the first, let's say, connection points and touch points. And from the real economy side, all the big international companies, at least that I'm aware of in Europe, are working on tokenization projects. Everybody's working on that. The regulatory framework was in part still missing. So regarding the complaints that we didn't see so many use cases, guys, the regulatory framework was not there. So now it will be there. With MiCA coming into place, not only stablecoins, is you can tokenize everything. And therefore, you will see, maybe not this year, but the next year and the year afterwards, you will see a steep increase of real-world tokenization projects, especially driven by large corporates. And they need a stablecoin too. And since we announced to go into that space, we got a lot of calls directly to us saying, okay, that was exactly what we are looking for, a fully regulated stablecoin issued from Germany into the European Union and elsewhere. And I think that was one big part that was missing, and comes back again to the trust structure that is also inherent in our shareholding structure and in the setup. And yes, absolutely, every stamp that we can get that shows that, yes, we keep the transparency laws, we're sticking to all the rule sets, we're doing all the collateral management, risk profile metrics that we can do, that helps us, because ultimately it's trust. I mean, you give money to the institutions, to the issuers, where you have the trust that if you want to have your fiat back, you will get it back.
Another question what comes into my mind, because you said most of the stablecoins are on Ethereum still, yeah? As far as I know, you plan to do it on several layers.
Yes.
So that it's as easy as possible for the users. And
as said, I mean, if a big corporate comes up and says, we're using Lightning, why shall I say, no, you won't get, I mean, nobody, I said before, you want to buy a bike? No, you don't get your euro to buy a bike. No. You can buy a car, but not a bike. It's not working. So you want to use Lightning? Use Lightning. Who am I to tell you not to use Lightning? You want to use Tron? Use Tron. Maybe we won't offer it on the last shitcoin that's out there, but it's focus on the big. I mean, you have 10 to 20 layer 1, layer 2 chains that are relevant, that might change over time. But this is where you have to offer it. If you're not offering there, most likely you can forget about it.
Many stablecoins are issued on many chains, but specifically for USDT, they have more volume on Tron blockchain than on the Ethereum blockchain. But in general, Ethereum, obviously, when it comes to being decentralized, is one of the largest and safest ones with Bitcoin.
Is this something you would rate as well? So if there is a stablecoin only published or issued on one chain, layer 1 chain, or on many? Is this also a security topic?
In general, SMID, the I stands for implementation, and this is something where we basically do simple checkups. Basically, we look at smart contract audits and some technical aspects, and if they don't apply, then a token can get a red flag that basically makes the entire rating an F, in disregard of what any of the other parameters would bring. But in general, we don't rate implementation and smart contract risk, because we do not want to give users the false impression that there is no smart contract risk if it had a good blue chip rating there. And we really focus on the economic safety of stablecoins. That's also where we feel that we can add a lot of value, because there are great smart contract auditing firms and technical companies out there that can do that risk assessment and that we can evaluate and incorporate. But our focus is on the economic safety of stablecoins.
Brings me to the next question to Alex. What about the cybersecurity and IT security topics for stablecoin? Is that a topic at all, or how can a stablecoin tackle this issue?
Yeah, absolutely. I mean, again, comes into the whole trust and security aspect. So trust is built on various levels, and security is one of the aspects. But let's say on the other side, you have to say, I mean, we're not issuing commercial bank money, to make this clear. It's e-money, it's an e-money token under MiCA. But in a sense, you're creating digital euro that can be used afterwards. So you go to your bank, you go to your broker, you go to your institution, you go to your corporate, you get the stablecoin. And then what you do with the stablecoin is like what you do with your euro. And I mean, what you do with the euro, you do with the euro. Yeah. Now, with a smart contract, you could actually build something into the smart contract. But the issue with that, and we had this shortly in the break, so you could actually, into the smart contract, program restrictions, for example, blacklisted restrictions. So I have somebody's blacklisted, I put in the smart contract, which would be actually pretty interesting, because then I could globally disconnect that person from access to money. Fine, but what if that restriction is lifted? That's difficult. I would have to burn all the tokens globally and issue new ones because the smart contract cannot be reversed that easy. So unfortunately, I have the answer, but I cannot use it. Yeah, but outside of that, you need to have, there's a pretty strict security framework and cybersecurity framework for that. There's a lot in the rule set for the MiCA and for the EMI license.
DORA coming as well.
DORA is coming. We are reflecting that naturally too directly, because otherwise you directly can delist again. Yeah, so there's a lot of rule sets that you have that add up to the price that I mentioned before. But yes, if you fail to do that and you have the first, let's say, fraud case, and not fraud case of a usage later on, but a fraud case in itself in the issuer, that will be a pretty darn hit for the issuer.
Yeah, and will have a negative rating immediately.
And that will have a negative rating there too.
How fast are you? If something pops up like this, for example, how fast would you amend your rating then for this stablecoin?
Yeah, we're doing checks every week if news change or if some significant fundamentals change, basically. Yeah, we would adjust ratings immediately. And
immediately or once a week? Because once a week would be ages, to be honest.
Immediately in the sense that we're always doing regular checkups in any case, but when it comes to adjusting, we're committed to update every day. So it's not like a rating can change with submitted information or discussions with the team. We're always open to adjust and give the correct and fair grade that applies to the Smith framework.
But as far as I understand, you would also reach out directly. Now, if something happens with AllUnity, for example, and you get to know it, you will reach out to them, or you...
I have to say it anyway. Yeah. When we get the license approval, then I'm a financial institute. For that one, I have to disclose material impacting things anyway. Yeah, if I do this, don't do this, I fail my regulatory framework. So then I would have twice an issue with my regulator and with them and with the clients. I'll not better do that.
There is information that's publicly available, and that's what we welcome the most. But there, for example, with Circle, there is no public statement of them being bankruptcy remote. So basically, if the Circle company would go bankrupt, would USDC also basically take damage of that or not? And yeah, that's the reason why USDC is at a B+, because to enter the A range at Blue Chip, the A rating range, you would need to be bankruptcy remote, or at least that would need to be confirmed. And so far, there's only Liquidity, which is decentralized on a protocol, so that would be bankruptcy remote. And then there are the Paxos stablecoins issued by Paxos, and there we have legal opinions that these would be bankruptcy remote.
Interesting. So for that, as a proof, you would accept, for example, I don't know, a Big Four company's audit or a lawyer's audit or something like that?
Yeah,
information.
The more proofs, the better. But yeah, like if
the more the merrier. Okay.
Yeah, exactly.
Maybe one of the final questions. You're always talking about buying a bicycle, for example, with the stablecoin, maybe even. Do you see on the horizon, so to say, point of sales where you can then really pay, for example, with my AllUnity wallet with stablecoins?
I think that this will take a while. I think that the first demand is coming from the trading side. Financial products has huge field of possibilities. I think that in payments, especially when it comes to cross-border payments, I think also on tokenization projects, again, mainly cross-border. There's the big first benefits, but then also domestic when it comes to really tokenization projects. I think that the classical payment, and that's always the counter argument, but it's super efficient because I can use my credit card and stuff like this. So I think the demand and the drive will actually not come from the retail side. It might come from the e-commerce side, where e-commerce companies paying a huge amount for Visa, MasterCard, for the payment venues. And maybe then you go to Starbucks, and this is the price when you pay fiat, this is the price when you pay with credit card, and this is the price when you pay with stablecoins. And that then drives the adoption. So yes, I see this, but I think that firstly, the demand will come from a different direction. But again, if we're doing it correctly, then the stablecoin is multi-usage, and therefore, the moment we create it, it is possible at some point in time to use it in a bicycle stop, a Starbucks, or however you want to use it. It's just an adoption thing.
There's for sure then a question that comes to my mind immediately. If you say this, isn't then not Tesla or Circle your competitor in the future, but Visa, MasterCard? Why don't they issue a stablecoin?
You have to ask them why they're not using the same.
But it would be natural, no?
Yeah, for me it would be, yes. I mean, PayPal made a probe in that direction. I think if I would be them, and I'm not them, sorry, but I would work on this too. Yeah, every payment provider they have to. I would say, yeah, it is a natural thing for them to think about these things, because the stablecoins have the means to do that, and therefore, yes, it can. Yeah, it can be in parallel. But also it can be a substitute.
Visa is actually internally using USDC on the Solana blockchain for their sort of internal operations in some ways, because it's just so efficient. They can send it basically through the world on any day. Doesn't need to be a working day. And yeah, so they are definitely very aware of stablecoins and are sort of working in this space.
Yeah, this is one of the most important topics in the future as well. If you want to have transactions done in the future, it should be immediately, and it doesn't matter if it's weekend or a public holiday, stuff like this. It should not take 3 days or more. Guys, thank you so much. I have a last word from your side and the last word from your side. Alex, maybe I started with Ben, so the last word from you.
Oh yeah, last word. I think that because we had this in a panel before 5 years down the road. Yeah, my drive is, or let's say, my son will not talk about blockchain anymore. No topic. It's just not a topic, because some infrastructure will be tokenized, some infrastructure will be securitized, some infrastructure will be classic. He doesn't care. He doesn't care. He just wants to use what is most efficient. I think we need to tremendously speed up. I think that blockchain is a collaborative thing, and the stablecoin is a collaborative thing too. And if we fail on that one, there will be others forcing the stuff on us. And when we evaluate business cases, we should not only talk about the upside risk, but also what happens if we don't participate. And not only as a company or as a country, but what happens if we as European Union are failing out on that one. And I think that needs to be much more discussed in the current geopolitical thing than this little, yeah, but I'm not here, I'm not there.
Thank you so much. That was great last words. Guys, thank you so much for being on my panel. And we have no time, unfortunately, anymore for questions and answers, but the guys are still here afterwards for the coffee break. And yes, thank you for your attention.
Thank you very much. Big applause.
Thank you.
Thank you. Thank you. Good. Now we are heading to our last panel. We heard about CBDC. We heard about blockchain in banking. We heard about e-money. And now we come to a special topic which brings us Mika. We have utility token, we have e-money, and we have something in between, which is called asset reference token. And the interesting part is they go in place end of June, so quite soon. So I'm more than happy now to welcome Oliver Völkel on stage to host the next panel about asset reference token. Thank you very much. Big applause.
Yeah, can you hear me yet? Is this thing on? Okay, great. Yeah, I have the pleasure to hosting the next discussion on asset reference tokens. And may I ask if Sandra Rowe has already joined us via video link? Okay. Because what I want to do first is, tell you who is going to discuss today. First, Sandra Rowe, if you can perhaps, yeah, here you are. Okay, I didn't see you. Yeah, she's a proponent for human-centric tech. She's the CEO of the Global Blockchain Business Council. That's the world's largest association of its kind with more than 500 institutional members. And she has a very amazing track record, and I only will tell you about her most recent steps. In 2023, she was appointed to the CFTC Commissioner Caroline Pham's Global Markets Advisory Committee and Digital Asset Market Subcommittee. Previously, at CME Group, she headed FX and metals research and product development, and she and her team created the CME CF Bitcoin Pricing Index and Reference Rate. And next on our panel is Thomas Dünser. Thomas, where are you? Come up. Also, big applause for Sandra. Big applause for Thomas. In 2023, Thomas founded Some Group, co-building the next generation financial system. He was director of the government's Office for Financial Markets Innovation and Digitization in Liechtenstein. As the Spiritus Rector, so to speak, he was responsible for the Liechtenstein Token Act, first comprehensive regulation of the token industry. And as a senior advisor to the Prime Minister of Liechtenstein, he was responsible for financial market strategy, digitization, and innovation. I'm very glad that we together can have this conversation. And the last technical thing I'd like to ask is, can we have Sandra also on this screen here, so that we can see her when we speak? That would be very helpful if you can manage that. Yeah, just 2 words about myself. My name is Oliver Völkel. I'm an attorney here in Vienna, Austria. I have a strong focus on blockchain and DLT and crypto since 2016, when I founded the law firm Stadler Völkel. And yeah, we have advised on many cornerstone projects in the past. I'm trying also to get the message out there. I'm lecturing at the University of Vienna. I'm publishing legal scientific papers, author and editor of 2 books in this regard. And so it's a real pleasure to have both of you here today to discuss the topic of asset reference tokens. And before I'll go, basically I'll include you in the discussion. I'd only like to give a very brief summary of what we are talking about. So what are asset reference tokens? And I would like to draw a clear distinction here between what you could, in everyday speech call an asset reference token and what this term means under the European markets in crypto assets regulation, MiCA, because here we have a legal definition of asset reference token. And under MiCA's definition, an asset reference token means a type of crypto asset, okay, that purports to maintain a stable value by referencing another value or right or a combination thereof. That's our legal definition what an asset reference token under MiCA is, which is fairly broad. And so in principle, it sounds a bit like a financial instrument. However, it's not supposed to be a financial instrument, because if it were, then MiCA would not apply, because there's exceptions from MiCA for financial instruments. So definitions matter. And once that's out of the way, so once we know what asset reference token under MiCA are, we can have a look at what MiCA says about them. And just to illustrate that, I'm not going to bore you with a legal presentation of that, but just to give you some idea, that's MiCA printed out, the English version of it, which is usually really sits on my desk, and whenever I need to look something up, I'll take it and I look through it. And if you go if you go through it, MiCA, I mean, besides this definition, there's a whole chapter, a whole section on how asset reference tokens are supposed to be offered to the public, and those rules do not apply yet. They'll apply on the 30th of June. But there's a whole section on, for example, how you should invest the reserve of assets, or how your reserve of assets should be custodied, or on your own funds requirements, or on governance arrangements, complaints handling processes, you get the idea. So it's a lot of regulation for a phenomenon that was, or still is at the moment, not regulated. And so it's a lot to apply starting on the 30th of June. And obviously the question that I have is, who is going to submit to these rules? And yeah, since definitions matter, and you know, in preparing for this discussion today, we also spoke a little bit about the topics that we want to discuss, and we noticed quite quickly that definitions matter. And so I would like to ask or direct my first question to you, Sandra. What's your take? Do you think we all mean the same things when we speak or when we use crypto terms, or do you think there's perhaps still a way to improve our mutual understanding?
Well, firstly, thank you everyone, and to everyone in the room, good afternoon. I wish I was with you, but this will be second best. I hope you can hear me. No?
Yes.
I wanted to actually highlight in our discussion that stemmed from the importance of definitions and making sure that we are actually talking about the same things is critical. And we have already identified actually that there are some terms that have been defined under MiCA, which will be very challenging. And just to give one example, versus what some terms that have recently been approved, for example, by the CFTC GMAC. And we've done some analysis on this. And I know this is a dangerous move for a live panel, but I'm going to attempt to share my screen and show you something. Let's see if we can do that.
Yeah, we can see it.
It? All right. Well, that's a good start. So this is something we presented at Capitol Hill a few weeks ago. And I just want to show you this. And this is a QR code that hopefully will work for you. So back in March 6th of 24, there was a set of frameworks, or a framework that was a set of digital asset definitions and taxonomy that both traditional finance players as well as Web3 members of the GMAC DAMs were able to coalesce around. And this is years of work, obviously going to different regulated bodies. We looked at MiCA as well. But there are some differences that I just want to highlight, especially related to asset reference tokens. So this is just a guide for you to see if you want to see the actual CFTC framework. But the next one is the most interesting one. We had a report done by one of our members, ValueVerse, and some of their leaders are former policy advisors and have written parts of MiCA. So we were very happy to have their opinions and also their analysis. So here's what they did. They compared the definitions and taxonomy under the CFTC approved version versus MiCA. And there's actually good places where there's absolute convergence and identical almost agreement. And that's in the first piece here, the security tokens, platform native tokens, CBDCs, fiat pegged stablecoins, and alternative tokens. So alternative tokens in the CFTC definition relate to also what we would call the asset reference tokens as well, which is commodities or other sort of backed tokens. Number two is interesting because there's a divergence in how we are defining out of the US versus also MiCA. And this is where there could be some interesting concepts that we would need to look at. Non-fiat pegged stablecoins, algorithmic tokens or stablecoins, functional digital assets, and settlement tokens is a concept that's used out of the US that is not really used in MiCA, for example. And then just so you know, NFTs and utility tokens were not even addressed under the CFTC version. So this is just an example to show how critically important it is for us to have these definitions, and actually the approaches are very different. The CFTC approach really focused a lot more about control and transferability of tokens as opposed to what the token is, which I would say is more akin to what MiCA has done. So I leave it at that for just the opening.
Yeah, thank you very much. And before I jump to another topic I wanted to do in the intro, perhaps, Thomas, if we remain with our discussion of definitions for a second, since you were involved strongly in the development of the Liechtenstein's Token Act, and if you remember when we had our discussion on the preparation of this talk, sometimes what I have noticed in practice is that a legislator looks at a market that is developing and it wants to regulate this market, and it uses terms in a law, for example, but perhaps with a slightly different meaning than this term is used by the people who are in this market. And I think we have seen this with the implementation of the Markets in Financial Instruments Directive in the European Union, where terms are being used. And then all of a sudden, the regulator basically tells the market participants that, well, this term actually does not mean what you use this word to describe, but actually it means something completely different. And so perhaps can you give us your perspective when you think back at the drafting of the Token Act? Did these thoughts occur to you, or do you think there's instances in this act of misusing the terms as they were used in practice, or was it something that you considered? Yeah, just like to get your perspective on this.
Yes, of course. So we did consider that. It was one of the major challenges we had to solve at the time. So remember when we started to think about blockchain regulation, it was 2016. I mean, if you know financial market regulation, we have two layers of the scope of regulation. We have the instruments layer and the activity layer. So if you talk about the instruments, so if something falls in the instrument definition of financial markets, like financial instruments, then you are inside the financial market regulation. So it's always, and this changes the game. If you issue a new instrument and it falls under financial market regulation, it's a completely different game than if not. And so this was the challenge I think every jurisdiction had when crypto assets appeared. And I think the Swiss have been the first with this three classes of assets, like the means of payment and security token and utility coin, something like that. And what we have seen at that point of time is that, I mean, we are in 2016, it still was at the very early phase of innovation in blockchain. Now we are still at the early phase of innovation, I would say, and it was not clear what happens with the blockchain in the future. So, and we decided to have another approach, and that's the reason we are only talking about tokens, because tokens are the general term that about information that is stored on a blockchain system. And I think the most radical approach we have chosen is that what is called sometimes a token container model. That means that the act of tokenization has no legal effect, so it does not change the instrument what you tokenize. And that means, and this was a discussion all around the world, that if you tokenize something, then it's a financial instrument because it looks like it's similar and something. And we say this is not correct, because if I tokenize gold, then why should it treat it differently than if I tokenize a car or tokenize a house or something? And so, and this is, I think, the most important discussion. I feel that it's still the best approach to the topic, because it's we will see in future many applications that have hybrid forms of tokens. So even the terms in MiCA are not really clear. So we will face tons of regulatory discussions, so that we have to define every application or the financial market authorities what is really meant with this definition, and then we have a I mean, all of that regulations about to create legal certainty for applications that fosters innovation, and I'm a bit afraid that this is not at a 100% solution with that MiCA definition. Even if MiCA is a huge approach and it solves many problems, but in detail it depends how it will be treated by the authorities and
Yeah, we are already seeing this. I mean, I like the catch-all approach on the one hand. I mean, trying to catch as many phenomena as you can. But then if you think about it twice and you see in practice the questions that arise, it's not so clear to me whether this was the better approach. I mean, if you look at how the EU regulator did it in MiFID, for example, the definition of financial instrument, I mean, they didn't bother with trying to get a catch-all thing. They just mentioned what they saw in the market and then basically revert the decision of what is meant by the financial instrument, back to the market. And I think that was a pretty smart move. But coming back to the Liechtenstein token and the token container model, to me it looks like this is a pretty good starting point to set up an asset reference token in the sense of a specific token maintaining a stable value to whatever real-world asset. And so I wanted to ask you, in your view, what's an asset reference token besides the MiCA definition? So for me, it's a token that remains stable in value, for example, to a gram of gold or a piece of I don't know, Nike boots or whatever. And but excluding money, excluding euro, excluding US dollar. Would you see it the same way, or would you view it differently with the background of the token container model in mind and so forth?
I mean, we have to frame it correctly. So in my perspective, there is the blockchain is not only used for financial markets purpose, but for whole economy. So in my perspective, I have also, tokenized cars and tokenized bicycles and tokenized chewing gums and maybe. So and the question is, if I look at the definition of the asset reference token, and we have to be honest, it is a political description of a stablecoin because it was not meant to be a stablecoin, but it's. Yeah. And so we have to challenge that now. We have the term asset reference token, and asset means everything. So every real-world asset token can be a asset reference token, and now it remains the question: what means? How can we narrow that to what do we think that is a stable coin? And if you look at the term stable value, this is quite an elastic definition. So if somebody wants to expand this definition, everything is covered with asset reference token, but then the token economy, so the digital economy outside of the financial sector will not be possible because then it's just too expensive.
Right.
And if it's possible to limit that to those stable coins that really want to regulate, then it's okay.
Yeah, right. I think the definitions in MiCA, basically they, at first, the e-money token and asset reference token, they basically meant the same thing, but only the mechanism of how a stable value, namely in terms of in terms of being stable in relation to a specific nominal euro or USD value. I think that's what they started out with, but then it moved to something completely different, and now we have to figure out what this actually means.
And maybe just one enhancement, because the term stablecoin is not really good. I just noticed that in the last discussion. We have to be clear what we are talking about. We are talking about means of payments. And no matter if we are talking about official currencies, means of payments, or kind of money market funds that are hidden behind the tokenized means of payments. But we need for the token economy kinds of digital means of payments in several forms. And so if it's stable or not depends a bit on the market. There are applications where means of payments that are just bound to something else, like a real-world asset, are relevant and really make sense. But this is the important term because it has also a tax relevance. So if I had to pay VAT for every transaction then it's worthless for a means of payment. And this is the political decision that we allow means of payments that are more diversified and not stablecoins. Stablecoins can be everything. So.
Yeah, right.
Sorry.
No, no, sorry. I just Sandra, I wanted to ask you. I know you have a very broad. You basically see the big picture. When we were speaking a couple of days ago, you told me that you basically see also how other parts of the world tackle this problem. And we said that, I remember we discussed that, well, the way you are basically, or how you're putting a stable coin or an asset reference token into a legal framework can vary dramatically. And also in Europe, depending on how you structure a product, it could fall under financial markets regulation or it could fall under crypto assets regulation. And so I would like to ask you, with your broad picture overview of what's going on in the world in this regard, do you see anything that's noteworthy, or how do other places tackle this issue?
So if I may, Oliver and Thomas, I'd like to just pick up on one comment that Thomas made, which I think is incredibly important.
Yep.
It's one thing to define the category, but I think where rubber is going to hit the road when it gets to practicality of business is, what is the function of that thing? What is it doing? Is it just for payment and value transfer? Is it also going to have a different role as the same thing? And this is what I think is the complexity around these token definitions. So I'm just going to leave it at that when we get to the practicalness of application, I think it will require further discussion and amendment and refinement, the functionality piece.
Yeah.
So
yeah,
that I will leave you with. But to answer your question, what is the rest of the world doing? Well, I want to just highlight one piece of work that we are doing, which I think is interesting and relevant because it's happening now. We often talk about Europe, US, Singapore, Switzerland, and Japan, and a few other countries to date. But there is a groundswell of work happening in non-G20 countries. In particular, I reference sub-Saharan Africa right now with some of the big economies there. And they are looking at the frameworks of MiCA and of what already has come forth to design their own work and own frameworks for rules that will be implemented. And what we're already beginning to see is there's a desire to borrow and also mirror some of the similar big categories, but there's also a desire to tailor down to local required, legal requirements and or regulatory requirements, which inherently to us will also mean that there will be divergence in treatment and application. So this is going to be an interesting space to watch, because I think there will be borrowing of some of the blueprint work, but ultimately it's going to get tailored down to the local level.
Yeah, which can be a good thing. And I mean, from the European perspective, we are now really at the cusp of MiCA being implemented. I mean, for asset reference tokens, it's going to start in 6 weeks already. And this actually brings me back to you, Thomas. You were there when the Liechtenstein Token Act was implemented and it entered into force. And this question also is asked with the aim of, perhaps getting a feel of what will happen once MiCA is in place. Did you see that the Token Act was adopted by the regulator and also by the markets well? Was it received well? Was it used actually to further the Liechtenstein economy in the crypto markets? So was it a good thing or a bad thing altogether? And obviously, I am asking this question with a view of what do you think can we expect from MiCA now entering into force?
Yeah, that's a very good question. It's not so easy to answer because it's, I mean, I think the most important impact of our law was the civil law definition and this token container model. And I still think that Liechtenstein is one of the advanced, most advanced frameworks for tokenization of real world asset. Marcel Fleisch mentioned before this framework because it just gives you a legal certainty for all kinds of tokenization. And this alone, this segment boosted the industry quite a lot. So the banks like the VP Bank or other banks in Liechtenstein could just only move with this legal certainty in the direction of using blockchain and tokenization of something. So this had a huge impact. The second huge impact was that we declared, or we clarified the application of financial market laws and applied a new form of regulation of critical activities like custody of crypto assets and so on. And this, of course, this was I mean, for a fintech company, it was a burden to get in this sector. And some companies chose to say, okay, this is too much for us. We don't want that. And some came to Liechtenstein just because of this feature. And so, meanwhile, I mean, the Liechtenstein crypto sector boosted still, even if not all companies came. So in my desk, I had about, in the last 10 years, over 700 companies that wanted to use Liechtenstein. And today we have, I think, about 25, 35 registered service providers. But the non-regulated sector was also very active. So we just calculated or estimated the amount of crypto or ICOs that happened in Liechtenstein was over 1 billion in a few years. So it was I mean, Liechtenstein started from zero fintechs in 2013 when I started my work. So it was quite a success story, but the regulation hindered companies to come here. So and one of the most hindering factors was the application of AML regulation, because this is just not made for a digital economy. I'm sorry to say that.
Yeah. It's. I mean, I always bring this line, but in my view, MiCA wasn't made for the crypto industry. The industry despises it. It really was made for the traditional financial industry. Basically, a nudge from the European legislator to tell the European market players, hey, why won't you also get into this market to be some sort of a counterweight to American and Asian companies who are active in this field? Sandra, can you give I mean, perhaps have you seen other places where new pieces of jurisdictions were implemented? Can you give us your estimate of what is likely going to happen under MiCA once it's in force? And perhaps can you draw comparisons to other places and other pieces of legislation? Do you have that insight?
I wish I could predict the future, but I think what I'd like to do is actually just relay some of the conversations I've heard, especially when we were at Paris Blockchain Week, and then obviously some of the conversations I've had here in Washington, D.C. I don't know how many of you will find this humorous, but I had a very well-known professor in the legal field ask me out of the US, the MiCA requirements are going to be coming in June 30th. Why are more companies not freaking out? Why are the Europeans not freaking out? And I thought that was a curious question coming from this professor, because their view was that, one, this is something that requires different country level clarity and implementation. And at the regulator level, ESMA and EBA are also required to now put all this together in a very short period of time. I think his point was just, how is this all happening on this date that's coming very soon? And the thing that I said to him was, I think there is a bit of wait and see attitude. People know it's coming, but ultimately what happens in practice, what happens in enforcement, what happens in application, really we do have to see on the ground. And I don't know if you share that view, but that is the view that, I think some folks are seeing from outside looking in.
Yeah.
That this is going to happen in Europe.
Yeah, I mean, also if I can share something with you from from my practice, I can clearly distinguish between the crypto native, my crypto native clients, so to speak, and they all want to fall out of MiCA, and they all want to structure their projects in a way that they don't have to comply and don't have to even read through the text. And then there's the others. who are actually the traditional financial participants, they are eager now in trying to adopt pieces of MiCA and to enter the market. And I think that's very interesting. And perhaps this is a good segue to another thing that I would like to discuss with you, namely the means basically or the general topic, decentralized finance. And you could also, or general decentralized protocols, and you could imagine a token project that purports to maintain, where the token purports to maintain a stable value, some sort of real world asset, and it's being done decentralized. And I would like to get your opinion, first of all, what's in your view, DeFi, decentralized applications, what's in your view sufficiently decentralized so as to not trigger MiCA? And this is actually, it's actually in MiCA, and I printed this one sentence here, it's in the recitals, and it states, where crypto asset services are provided in a fully decentralized manner, and the second thing is, without any intermediaries, they should not fall within the scope of this regulation. And so I would like to get your perspective, both of you. What do you think is fully decentralized? And perhaps, Sandra, you would like to start?
So it is very timely, Oliver, that you are even bringing this topic up. There's been an epic debate, which is also why the concept of decentralization is not a definition in the CFTC framework that was actually finally approved, because it proved too controversial. People could not, on both sides, on the various sides of the fences, could not agree on what would be sufficient decentralization. Because you can imagine the way the regulators might see it versus the way the traditional businesses might see it, and also Web3 folks will see it, are very different viewpoints. And frankly, at the moment, we're still working through the common ground that we can find. And I think that is going to be a very contentious set of debates that need to happen now around the world, because that will dictate whether people fall in or out of being regulated.
Yeah, Thomas, I know you wrote a paper or more papers on DeFi and decentralization. So what's decentralization?
We wrote these papers because it was one of the most intense discussions in the last years, because many projects just wanted to know if they're regulated or not, and so it was not so easy to say. I have the feeling it's a wrong discussion. It's just, it's relevant because we stick on that discussion, but basically, it's a problem of the legacy regulation, and I call MiCA, I'm sorry to say that, also to a certain extent a legacy regulation, because we, I mean, what changed in the past is that we before, I would say before blockchain, we had just existing business models like banks that are necessary to provide the settlement infrastructure and so on. And with blockchain, it's now possible to change. So we have a more fragmented financial market system and so MiCA used this idea of fragmentation of the value chain and splits the functions of MiFID's regulation to in a more granular aspect, but still it's regulating business models. And so if you look at decentralized aspects, we just see a further fragmentation, and so we missed the chance to insert a further fragmentation in MiCA regulation, because this could help to solve the problems of DeFi. Because what needs to be regulated is if a client can be harmed. So if somebody has access to admin key and can just take over the assets, then it needs to be regulated in our system. If there is no risk to clients, there is no need for regulation, and so on. So we have to be just more precise in the view of regulation. The regulation is not just to be taken over because we have regulation. We have to think about how to create an environment where innovation is possible with the level of client protection that we want to. And so that's the challenge I see in this debate about DeFi. We need this term about DeFi in MiCA because if MiCA regulation is applicable on all DeFi projects, they are dead. So Europe would be out of the game in this term of innovation, and this makes it so difficult. I believe that there are true DeFi projects, but we need to find a way how we set the border between MiCA and this, the DeFi innovation space.
You both very eloquently avoided answering my questions, I noticed. I mean, there's, and I'm going to press you on it. Everybody is talking about decentralization. Give me your personal opinion on what it means. Thomas.
I mean,
is Bitcoin decentralized?
Okay, sorry to say, it needs a bit more of explanation. So in DeFi, we have several layers. We have the settlement layer, we have the token layer, we have the service layer, and so on. On each layer, we need to talk about decentralization. So Bitcoin, if you talk about, there is, I mean, if a blockchain is truly decentralized, it's as secure as possible from this decentralized point of view. And it depends on how many nodes there are and so on. With Bitcoin, I would say, I'm not updated recently, but I would say it can be seen as decentralized, as sufficient decentralized. If you look at a new blockchain that is just issued some month ago, it cannot be decentralized. Because they start with a few nodes and expand that and they need to build a trust system. And the challenge with this discussion about DeFi means that a newborn blockchain layer 1 falls under MiCA because it's not truly decentralized, but will be decentralized maybe in some months or years. So that's the challenge. And if you look at the service layer of DeFi, it is possible to say that the DEX, decentralized exchange, is truly decentralized. But many of the DeFi or the DEX system we see currently are not truly decentralized. Some have hidden admin keys, some have some form of interaction of a platform. It's really, it depends on the details. So even the kind of DEXs we see today are just the beginning of the things that we can see. So,
or perhaps there's just one person who's providing all the liquidity, and then you could really ask questions. Sandra, would you like to add a little bit on that, or?
Sure. So, piggybacking off of what Thomas has just said, I think instead of us just focusing on the concept of decentralization, I think we need to look at it from a mitigation of risks point of view. Because any technology, when you go solve one set of problems, you've inherently created another set of considerations and problems. And my view is that, blockchains are good for some very specific things. Whether they're sufficiently decentralized or not can be one component of several different standards that we really need to be developing around. Do these things then require regulation because they're doing activities, or the things that are sitting on it are activities that are and should be regulated because we need to protect consumers and prevent fraud, et cetera, et cetera. So I think the approach that we do need to take is one of being more holistic around the activity, the potential risks to that activity, and what the underpinning infrastructure or the network does and what that stability looks like. And so I think from a reframing perspective, I do think we need to cast a wider net about how we're looking at this problem.
Right, yeah. I mean, to add my personal 2 cents on this, when I look at different projects and I compare them to how the traditional financial markets work, in the traditional financial markets, you have one person who provides a service, and you have a lot of people who interact with this one person, and there's always a contractual relationship between the service provider and the person who is using the service. I think that's a good starting point, because if you compare it to, let's say, Bitcoin, and also when I, legally assessed other, purportedly decentralized systems, what I found usually is in a truly decentralized system, and that's how I understand it, people interact with a protocol or with a system, but they don't interact with each other, so they don't form contractual relationships with one another. There's no there's no obligation on the one side and no corresponding right on the other side. So people don't face each other basically in decentralized systems. And I think, at least for me and for when I'm trying to figure out if a system is decentralized truly or not, and this has legal consequences obviously, then that's a good guiding rule of thumb or guiding stone for me. If there are contractual relationships formed, usually it's centralized. If there are none, then usually it's decentralized. But yeah, I was really curious to get your perspectives on that. And I mean, our time is almost up, and I would also like to give both of you a chance for a couple of final words. Where do you think the journey is going? Is there anything that's important to you that you would like to give us on our future journeys? So Sandra, would you like to start with some closing remarks?
Sure. I think what's happened under MiCA is truly extraordinary in the sense that you've got a framework that now exists for a population of collectively more than 500 million people. I think as a precedent, that is pretty astounding to have a common framework. Is it perfect? No, it's far from perfect. However, where I think the next steps go is around the practicality of the application. So I'll just leave it going back to asset reference tokens. If we live in a world where asset reference tokens start capturing what I would call collectibles or very small markets where people may be trading, as Thomas mentioned, in Nike trainers and sneakers, and we're going to regulate that to death, and versus, let's say, a crypto asset that is backed to gold and trading in the market. To me, these are very different markets. They require different levels of enforcement and oversight. And frankly, we need some practicality in that application, right? So the what I call logic and practical testing of what actually gets regulated needs to come in now that we have a framework. And we have to be reasonable. We can't ask regulators to regulate everything. It just doesn't make sense.
Thomas?
Yeah, I see some developments that are good and some that need to pay attention to. So the good thing is, as Sandra mentioned, is that with MiCA we have a good framework for certain kinds of applications of crypto assets. So and we have heard that before. It's not made for small companies, so it's a chance for existing financial intermediaries to jump in that business and to have a clear framework which is made also for somebody with experience with this kind of regulation. And the market is big, and there's huge potential to innovate and to find solutions and to give value added to customers. So that's the good part. And there is Europe in a perfect position to use this regulation. The second part is about the room for innovation. I'm a bit more concerned in that sector, especially if I look around the world, what happens in other jurisdictions, in other continents. So we need to open a room for innovation, and also if we discuss about means of payments or storage of value functions or new forms of application. We need to find a way that this innovation is possible even in Europe. And I mean, financial market is important. We are all coming from financial markets, but also a huge part of innovation happens in the real world economy. And this, we need to find a way that our economy in Europe can profit from this next wave of innovation that comes from tokenization. We have a quite good starting point, but there are many obstacles that could hinder this development in Europe. And my wish is that we can profit from that, and that's the Web3 development and the token economy development also creates jobs and prosperity in Europe.
Yeah, great. Sandra, Thomas, thank you very much. It was a great discussion. I really enjoyed it. Thanks to the audience. I think I'll hand over to Paul again.
Perfect. Thank you very much. Big applause for the panelists. Good. So unfortunately, this was the first International Blockchain Day here at the OeNB. First of all, thank you very much again to the OeNB, and one person we didn't really mention. Without him, this whole event would not be possible. It's Johannes Duong. He's doing also a lot in Austria for this. So a big applause for Johannes Duong. And of course, without him, the DAAA would not work. Holger Greiner, our General Secretary, who organized everything in the background. Also, please, big applause. And who is not a member, please go to him. We can sign directly here. No. So that was it. For me, quite intense. And I think there's one thing which I definitely take away from here. We talked about on all levels how to use blockchain. But it's not the question, will it come or not? I guess it will come. And this we can take anywhere from here. So whoever wants to continue with us in discussion, we can meet in the Café Edison. It's on the other side of the park. Unfortunately, on own costs, but we can have great talks still. So it's in 15 minutes in the first floor. So thank you again for everybody to be here. And the next event will be in September 26th at the DAAA Jahrestagung. So thank you very much.